Good morning, guys. Ding ding. Let's see if Discord's gonna work today. Probably not. Oh shit. That's a big deal. BNED's getting 95 million new capital, 50 million equity investment, 45 million fully backstop equity rights. Eliminates 34 million of debt. Okay. I'll check this out. Neat. What's BNED? That's 20 cents. That's a healthy reaction. Somebody's a little bit over short, maybe. 900 million share offering. What's the business plans issue? 900 million shares of common stock at a cash subscription price of 5 cents a share. Being able to distribute to each holder as common stock on a record date, one non-transferable right for every share of common stock on the record date, and each subscription right will be entitled the holder to purchase the number of shares of common stock determined by dividing 900 million by the total number of shares of common stock outstanding on the record date. Hmm. $53 million outstanding as of now, yeah. $50 million shares. They're converting 34 million in debt into equity. $325 million credit facility. This process requires shareholder approval, and BNED will register these offerings at the SEC. Interesting. All right. Give me 1 second. My BNED CCs are way underwater despite the stock dropping 70%. It's probably going to go back up, I would assume. This is going to be kind of interesting. I still need to read through the rest of it, but looks like they're converting over a bunch of debt to equity, establishing a credit facility at a pretty decent rate, 3.5% per annum. 45 million shares in common stock not subscribed for the company's stockholders' backholder commitment. Backstock commitment. Anybody who exercises their right will be entitled to oversubscription rights. Hmm. It's going to be kind of interesting to see how that plays out. Is yen just going parabolic? Yeah. Yeah, it is. Short vol fighting for their lives. Hmm. Is that going to be enough money, though? So if they can convert out... $34 million. $95 million in new equity capital. $325 million in the credit facility. Hey, look what I found lying on the ground. What's up, Potato Town? God, can you translate into English what's happening with BNED? They're converting a bunch of debt into equity. Basically, they're trying to save the company from bankruptcy. So they're trying to basically improve the balance sheet um, in order to continue rolling out their proposed services package, which has not yet yielded them any profits. Well, not any significant profits. But if they can survive until the school year starts, it could be kind of impressive. Don't forget that their market capitalization currently is like $37 million, right? So they're raising and with the credit facility something in excess of 10 times their market cap, their current market cap. Buy them out, Gherkin. They have like $1 billion in debt. I don't fucking think so. SPX expensive, so expensive. It's not cheap. Nope, sorry. Boop. And no, why would I ever want to do that? Averaging down your BNED. Kind of hoping I can close some of these covered calls I sold, and then I might average down. I wonder if I'm gonna qualify for oversubscription rights. I should. I can reduce that debt by $100. You're saying this is a buy opportunity on BNED? I mean, not necessarily. They could fail in their attempts to turn the company around. Using 50-50 20 minutes in the market open is bullish, right? No. No, that would not be good. I don't know. I'm not too worried about SPX price right now, just because it looks like we're gonna stagnate a little bit. Even if we lose 50, there's not much of a downside ramp. Um, and I think neutral positioning is probably gonna dominate most of the early day, like jockeying, and at least until JPOW speaks, which is what, in an hour. Oh, it's at 1:15. I thought it was early in the day. Okay, we might slide around a little bit more then. 40 is supportive on a drop here. moderately. I've adjusted my VIX chart so I can see VIX 20 to 25 only. Jefferson spoke. Barrett getting wrecked. Gold's at 23.90. Ooh. This could be a buy opportunity. She's going to be moderately important. So I'll put a line there. Yeah, selling off back to the low. $320. Mm. Ow. All right. Took some awesome SPXS profits this morning. Nice. I've adjusted my if 10-year breaches 5%, how many bank 2Ds are you buying? Ooh. Some. Do you think J-Plow performs a rescue mission today? I mean, he might try. BNet trying to do that rounded bottom breakout thing. Kind of looks like shit. There's a lot of shorting on the drop. So this looks like 1 hour. 22 cents. Kind of recovering a little. So this has to be factored into their market cap, even with the dilution. 401k buy is happening today. Good for you. Are bulls getting ready to peace out or diamond hands? I think 50-50 is probably where that will be determined to some degree. Would Amazon ever want to buy out BNAD? That's possible. My calculation, this isn't bullish. I'm ready to run a hedge fund with this type of analysis. Yeah, that sounds. Are we one of the largest broker dealers in the US? On our strategy call this morning, they finally discussed the possibility of the Fed raising rates and inflation increasing. That must have been tough. Poor guy or girl. SPX huge gap at 50.38.84, 49.83.21 from 212.22. Yeah, that doesn't matter though. Psychologically, maybe market makers have already taken that loss. JPOW banks are sounding resilient. Inflation equals defeated. Rates equal going down. I mean, what else would you say? Kind of feels like someone shorted to get in on BNAD. I mean, it definitely looks like there was some shorting, but they're also diluting a bunch. There's a shitload of volume. SRF down peener. I keep making guaranteed profit spreads. No wonder my wife likes getting spread so much. Look at you, Carl. Living the dream. Are BNAD $1 calls priced good? No, probably not. It was tough knowing something months in advance and hearing it as news. Was anybody in the meeting like shocked? Did someone cover their mouth like JPOW? Some banks are actually fucked. He said that at the last Fed like presser. Sorry I'm late, but I think I can save BNAD. Who's their transfer agent? Well, let's see. If they have 937 million shares and a market cap of 400 million. That would give us like 42 cents a share. So I would say that there's a small argument that it's undervalued right now. Hmm. Fuck it. Getting a nice reversal here off of 45. I'm gonna buy them on here. Curious. I mean, I took profits on gold when it was up at like 450. 450. Huh. $50, $60. So rejection at 65. Hmm. I bought the top of Barrick because I thought it was running. Didn't you say it was going to 28? No, I said I was targeting 28. I also have like June calls. And I sold half of them. More than half of them. Barrick drops because of Molly issues. No, no one gives a shit about that. I have shares. Okay. When sellers on ES at 51.25 and 51.55 get blown up, it's over. Mm, 50.25? I'm going to assume you mean 50.25. Rasma, welcome to Zillionaire. Thank you so much. Hit me up on the Discord. I'll get you added to the country club after the stream. It looks like the drop in Barrick is mostly that they trimmed production numbers for Q1, and they have lower than expected copper production out of Lumwana. But they're expecting production, gold and copper to production, to increase each quarter throughout the year. Pueblo Viejo plant expansion is ramping up from Q2, and the Pereira mine restart is continuing in line with the current plans. The Q1 gold production was lower than Q4 2023 as a result of planned maintenance at Nevada gold mines and mine sequencing at various sites. Seems like an overreaction. There's still a lot of shorts on Barrick, though. So that would explain why there's an overreaction. Oxy tried to drill for oil in the NYSE basin. It slipped 2%. Yeah. Earnings is coming up. Big deal. It's still up like 20% this year. You guys are bad at holding shit. Hands up, actually, I thought there was a country club. Pulls me to this 50-50 line. Chances of a bounce here. They're gonna probably try to fight for it. It's an important level. Thanks. Cut the rest of my junior losses. Blown out my port thanks to dumb 0 DTs. Planning to do smart things with my remaining money going forward. Okay. Cool. Bought some Oxy calls this morning. Was not the move. Buying calls on Oxy is never the move. It's like one of the oil stocks with like the least correlation with crude prices. So even if you expected crude to go up, why wouldn't you buy calls on like Chevron or Valero or Exxon? I was talking ES, not SPX. ES is trading at 5,100 right now. GoEV woke up a little. Ooh, neat. Hmm. Do I want to re-enter a position on that? Maybe. Literally any other oil company? Yeah. It's beyond a good buy. I might buy some more around like $5. Is there a level on RRP that does matter? Nope. Too early to look for long entry on commodities. I don't think so. Which commodities? They might pull back a little bit. They kind of peaked a couple days ago, so broadly, like commodities index. If there's a specific commodity, well, that's another story. Do you have some thoughts on earnings? I want to buy puts on it because it's really close to gamma neutral. And if earnings misses, it's going to tank hard. But I'll probably get like out of the money debit spreads that are just super cheap and gamble on it. If we break SPX 65, how high can we go? I don't really think 65 is an important level, but uh hmm. Give me 1 second. What's the most effective way to figure out what the real short pressure is on BNAD? What are you talking about? How far out would you target Carvana 57? Shitty entry. Why would you buy in now? It already hit the PT. Taking on a lot more risk trying to short it here. That's a TM potential. Head and shoulders on the daily, along with yen issues. Could be an opportunity for puts. No, Toyota's a multinational. They make the vast majority of their money in dollars. That's a terrible fucking short on the back of yen issues. If the yen rises, Toyota's gonna tank. $18 for premium, no ads, the best money I've spent since GME. Yeah, they've gotten really aggressive in their shilling of their premium YouTube. Gherk, the market is waiting on JPOW, but if he says repeats the usual, will that be taken as bullish? Not necessarily, but we did drop 4% so far. It wouldn't be unrealistic to think that we could have a bounce. It's just that a bounce won't really matter unless we get back over like 51.25. I'm so happy about BNED at the bottom. Nice. Carvana, because still good. Last week's play was great. Need more credit plays. BCS still good. Yeah, BCS probably is fine on it. I don't know if I'd want to enter like more of a long short position at this level though. Do you have updated AMD neutrals? Probably. $62.55, $63.15, Delta Gamma. Someone tell me why I quarter YOLO'd into BNED shares 30 minutes ago. I never make good plays. Well, you're up. I may have bought some as well. Nothing like a quick 20%. 50 if you hit the low. 60. Wait. What the fuck? It was down 70%. It's up 13. Hmm. 58% return. Yeah. Nice. I have 3 DTE SPX straddle. Strangle, there's no big overnight move. Is it no worries because theta or better to cut and reposition? I mean, if you haven't lost any money, you could cut and reposition later. Wait, so why is BNED down a fuck ton? Oh, here, I'll send you the whole thing. It's so cheap. Or or it's not. Well, it was. It was very cheap. I sold it all at 70 cents to buy 0 DTs with the proceeds, but I'm still interested. You could have sold in the money covered calls. God damn it, Dork. Nope. Do you just not believe in the college book industry? They're doing a debt to equity conversion. In college, I bought my books used and sold them at the end of every semester. Nice. Does Bounce on Carvana have any legs? I have no idea. Maybe. Looks like the volume's pretty low so far. I would say probably a bit oversold after the 12% drop in the last 2 days. These free PDFs for every class except a few where I knew the textbook would be valuable beyond my education. Mine were just part of the tuition. Have proven valuable beyond your education? Have you ever pulled the legs off of a grasshopper? No, that's some serial killer shit. I don't even know if I want to trade today. I somewhat agree with you. Options are way too expensive. You just have to like target the extremes, right? I mean, this looks kind of bearish. Momentum's starting to fall off. Just not like very bearish because there's not a lot of momentum. I think Powell's talks at 1. Might be better after that. I was thinking about buying a 5100. I was like, maybe not. I can't really get a feel for how this is going to play out. That's fair. The 5100's been moderately sensitive to the price action. I think it hit like $5 once. I mean, you could scalp the out of the money contracts just because vol's so high, but definitely risky. Yeah, 580. Now it's 4. It's 350. Hmm. We had a lot of put selling earlier, but that seems to be falling off. BNet share offering. I was thinking bankruptcy when I checked the price. Yeah, big dilution. But the capital raised could be kind of interesting. Do you ever dream of charts frequently? Yeah. Been a Jimmy merger for the lulz, aka why would RC do this again? What BTU good entry? 20, 18? I like 18 a lot. I tried to find out what's going on with BNet. I couldn't. What's the deal? Debt to equity conversion. So doing a big dilution to raise a bunch of capital. Although I'm really not sure it's a net negative. I mean, even after the dilution with the credit facility and the capital raised, should be worth like 40 something cents a share. I'm up 20% on being not accounting for the CCs. I don't see the issue. Gold is dead. Long live the dollar. Gold is flat. The dollar's also kind of flat. I don't know why Oxy's down so hard today. I haven't seen anything. Ooh. Go EV's starting to bump a bit. Hmm. Well, it's either going to push up and break through all the calls at 3 or it's not, right? There's a decent amount of call interest there. I assume the majority of them are sold. $2,000 on the leap strike. Yeah, not bad. Futures finding support again at like the 50-90 level. Rejected off 70. Ooh, calls are selling really fast. Yeah, this might get a little bit of a continuation. So if we lose 50, we could go to like 25. Whoa, can I buy BNED shares just off the money I find in my couch now? Yeah, yeah. Actually. Ooh, that's a nice push. Wonder what, do we have Greeks on that piece of shit? Probably not. Oh, we do. Motherfucker. Gamma Max is at 8? Son of a bitch. That can't be right. Hmm. Yeah, I know. Let's see that. Hmm. Resistance here. Interesting. Okay. SPX still looks pretty weak. I'm not sure it's going to be able to hold this 45 level. We'll see. Keep an eye on vol. So if it starts to tick down, then maybe we get a reversal. $470. Oh, bull's got a little bit of a bounce there. Is at the bottom? Nice reversal in delta. Maybe I leverage this up. Okay, fall spiked. Hmm. Jesus Christ. $18 for the at the money put. That's insane. Is it gonna be boring chop, lose all your money sort of day until JPAL? I don't know, this drop has been pretty good. I feel like VIX above 1950 is super bearish. Hard to confirm it's gonna go that way, but still have a decent amount of put buying down to 50.25. I think I'm gonna watch and see if this fails, and then if it does, I might pick up a put. GoEV looks like it's got enough covering that it could probably break through the sold calls at 3. Did you touch on why some commodity stocks are down today? ECB speech, maybe? Industrial production was pretty flat. I think Iran said this morning that they're not interested in further escalation. So back and forth on geopolitical risk. Hmm. Time for 5100s? I mean, they're trying really hard. But this is a terrible position to do it from, right? Yeah, but the narrative around that risk is flip flopping, right? Like, Israel's like, we got to attack them. Iran's like, we don't want to escalate. Should be any federal regulation capping toxic airborne silica for miners? I mean, that wouldn't affect SRF or Oxy, I don't think. Well, not much. Didn't know queso first today was spy puts. Choppy. That's the problem with all this fucking neutral positioning, is it's just gonna be choppy. You know what? Maybe if I could get the 5100 for like $1.75, I'd be interested. Oh, Go EV broke $3. Nice. Yeah, big chops because of the VIX, but dangerous to play all the same. And at the money contracts are way too fucking expensive, right? So you need to be able to predict bigger moves. Kind of like where this is headed. That's pretty flat. Still kind of choppy. That's a little bullish. And if we get back above 50, 50, where could we push to though? Maybe like 5100 ES retest, which would be about 50.62. 2.8K contracts expire Friday. Interesting. Maybe synth long. The $4, $3 cost are good. Price is not reflecting the move. Would you sell another contract against this? Or something else to capture gains? Really? I'm up like 55% on them. Oh, you have Jan? Um, yeah. Well, you're just not getting the benefit of the increased volatility, right? Or at least you're not getting it yet. You probably will, but no, I probably wouldn't do that. That's just like a reg show play, right? So I would say that selling something against it would be pretty risky. Still in your straddle legs? Yep. Strangle, but yeah. Kind of excited by the dip on some of the commodities. Better wait till the sell off, find some sort of bottom, probably. Or, it's better, it seems better than trying to catch a falling knife, at least. Ooh. Bought a house in 2017 for 260K. Listed today for 600K. St. Pete, Florida. Soon I'll get to invest in pickles picks. Nice. Congratulations. Tech got a bunch of upgrades, and banks did okay on earnings because of services revenue. So it might be some passive buying. RSP down 60 bips, so mostly NQ holding us up. Yeah, tech's definitely leading the way here. Ew. Ooh, interesting. Short vol fighting back. Kind of, it's kind of fun. Price is going up, but vol's declining. We sold the fuck out of the $3. Mm, that doesn't look good. The actual fuck. Hmm. Alright. The amount of chop on VIX is regarded. It's a little choppy. Bulls don't want VIX to break 20, which is kind of understandable. Do we get a breakout here anywhere? I guess if we can get above 56. This could run a little. It still looks really weak, though. Hmm. Alright. They're expecting this to move significantly once JPOW does talk. Everything seems bearish, so I'm conscious of index pump dragging up stocks that like Big Bear. Oh, Jesus Christ. They're so annoying. It's just choppy, man. Uh, I don't know what the fuck Powell's gonna say. Would you still have into Hal here? What's wrong with Hal? Yeah, I don't see why not. Did you already go over the drop and Beanhead? Yep. Big shelf offer. Do you want to add to this? Not yet. Still really weak. Hmm. So there's buy support for the 5100 at $2. Call buying's picking up at the 50 strike, but nothing in the money. Put selling is not picking up. Thanks, French. See ya, man. Go EV dead? I don't know, maybe. Might just kind of slack off through the midday and pick up again into the end of the day. It's fucking hard to get out of those options. I can't get fills anywhere. Yeah, I'm playing calls here, but it's risky. We're gonna need a lot more buying to reverse this. Let's see. Hmm. I don't even really want. I don't really expect like a big upside move here. I'm targeting like 62. With VIX up, the zero GT gamma curve looks more like one of Carl's titties than it does his peen. Nice. Great micro lesson and setting stops there. I mean, it's just like, if it fails this breakout, I don't want to stay in the calls, right? So I got a pretty tight stop set. I'm also glad, like, I didn't get a good entry, but I'm glad I didn't try to target 175 because it's never tested that. All right, there's a little green penis popping up. I don't even know if bulls can get it over 50-50, to be honest, though. It's gonna be tough. Unless we got a higher low. This might be more of a struggle than it's worth, though. Greenness. That's amazing. Glip glap went up. Oh, you son of a bitch. If we did break 50, upside limited to 75 or less, I mean, I don't even think we could hit 75. I don't, yeah, 75 seems way out of reach. I'm targeting like 62. Unless we get like a big push, but we haven't gotten that yet. That's gonna come with like a lot of short vol if it happens, right? So it's not something we have to worry about until vol starts tanking. Right now, shit's definitely still underwater. If we can break above 56, that opens up like a little bit of potential. But then I would say there's going to be a lot of resistance at 70, like there was earlier. 68, 70. Hmm. Do I have BNED saved on here? There we go. What if this entire time Shortfall has been embracing the martingale strategy? Okay, fair. How do I improve my Cavatelli? Well, what's wrong with it? Oh no, Popcorn's asking when up and I have calls. Fuck my life. I just want this to push the closure of the short calls that were sold off like right here. If those close out, I think it could bump back to like 4, and that's kind of where I want to sell it. Shortfall doing their thing. Yeah, they're trying. I wouldn't say that the effort's all that impressive yet. Being at the same share count as Shrimp now. Yeah. Fucking company makes $400 million a quarter. Unbelievable. It's lacking a certain je ne sais quoi. What is? That's on the Fed maybe stepping to help the market. Yeah, that chart's bullshit. All the Fed's purchases are disclosed, and the things he's using as metrics of like capital flows are stupid and delayed. It's both. Thoughts on the market stepping in to help the Fed? They're definitely choosing their policy path for them. Free shrimp ring with every student sign up. That's a good idea. Thank you, Daniel Groves, by the way. Sometimes I watch the 1 minute and it smashes red candles, and I have to switch back to the 5 minutes to make me feel better. Oh, come on. You're so close to squeezing out the pitsies. Or the calls? Both? I'm gonna lose more value to short vol than I'm gonna gain from price improvements. Got a quick update on our old pal Fuberto. I don't know how long you've been gone, but they've embroiled themselves in a lawsuit with Disney in an effort to curb unfair pricing practices and monopolistic market fixing. If they're able to get an injunction against Disney and Fox creating a joint venture together, it could be very, very bullish for them, or wildly stupid. I don't know. What's JPOW gonna say about Canadian inflation? I mean, he's probably gonna make fun of it. It's fucking Canada. Imagine if Fubo does win though, right? Like like if they get the injunction, whew, it's gonna be a fun day. He's gonna use Canada as a what not to do example. I mean, they don't need to win the lawsuit, right? They just need to get an injunction. Strategically, it makes sense, right? Because if they can get the injunction, then they block their biggest competitor from entering the market. And if they can't, nothing changes, right? Everything's just the same in an environment in which they've already been improving quarter over quarter. Yeah, the pumping the Mag 7 is the most efficient way to pump the market, but isn't it kind of not smart to push concentration risk at this point in the correction? It's not smart at all. That doesn't mean they're not going to do it. It's shooting vol hard, but the price isn't going up. That's bullish, right? No. Well, we'll see. I hope it is. It's not great for my out of the money contracts. You sell CC on your T position? Sometimes. It's usually not worth it. What's your PT on Fubo? It's like, what is it, $7 to $10 by end of 2025? That wasn't based on the whole Disney thing. Obviously, that was later on, but that was based on them meeting the EBITDA metrics required for the executive like bonus payout. It's not smart at all. Doesn't mean they're not gonna do it. It's great for my in the money spreads. Ew. Mm. What a dog shit breakout. Hmm. The downside moves are still so much more sensitive. We're getting put accumulation again. 30 and 25 are picking up quite a lot of puts right now. I'm not sure that we're gonna get any more lasting upside here. I'm probably running out of room. Gross. All I want is like one good pump to squeeze these off, and then I can buy puts. Bounced right as I got stopped. Yeah, it got pretty close there. I moved my stop down like 10 cents to stay in. Fucking useless bulls. Come on. Push it. JPEG's the only one with the power to give this a bump today. Probably, yeah. Well, BNet need to do something to get over $1 per share soon, or risk delisting. They'll probably reverse split. Do you have a nail painted? No, I have a band-aid on. Gold 17C, 18C 419OI that was in the money hasn't sold off. It could recover pretty easily. Yep, it could. GoEV looks interesting still, too. For an initial sell-off, that wasn't very strong. Although, I'd be careful with it. The fucking liquidity on those contracts is rough. Might be better to try to play the... of course it got fucking rejected. God damn it. Piece of shit. Maybe I'll try the $3 weekly. Maybe that one's going to be more liquid. Alright, hold on. What the fuck was that? Hmm. Um... DRV SCH. Okay, I mean, this kind of looks bullish as fuck. It's getting covering in its ETFs and the underlying still. Hmm. 13 days on reg show. Yeah, it's over 13 days, right? How many days on? 18 days on? I'm thinking about GoEV. Just can't squeeze the fucking short calls off fast enough. Not budging. So we need to get above. I have three big breakout points are 55, 60, and then 67. That's getting a little closer to the money. Maybe that's kind of bullish. Ooh, pressuring it again. Should I just lock in profits this time? And if it doesn't, like if it doesn't fucking run, I'm out, I'm over it. I'm already kind of over it, to be honest. Yeah, so this level is really important. 55, 56. Oh shit. Oh, sorry. Did you hear about the constipated accountant? He couldn't budget, or he worked it out with a pencil. Nice. My Barrack Longy hurt. Did you not scale out when gold hit 42.50 or 24.50. All of my Barrick positions just free now, so I don't really give a shit what happens to it. It'll probably recover. I mean, like the currency risk isn't going anywhere anytime soon. Gold's still quite strong. Bounced back from the like 2350 test yesterday. Go EV on the 4 hour all day, exhilarating. Yeah. Yeah, it is. You know what's exhilarating on Go EV? Gamma Max is at fucking $8. Who just slandered my profession? It was a fellow pigeon whale. Cat hit the price target from the pickles picks. Yep. Hmm. Why is this so fucking grindy, man? Like, it's resistance, but Jesus fucking Christ. It's a lot of consolidation. Ah. Is that it? Bulls are done. Pathetic. Oh. I'm sure when JPAT opens his mouth, we'll skyrocket. Maybe. We'll see. There was a bearish cat pickles pick. Yeah. Like right after the call pick, because all of the big upside positioning sold off. So I played the long and then the reversal, which the reversal took way longer. But it was a good play. I ended up selling, like taking most of my profits at 65 though, instead of 50. I still have a few left, but not many. Gap fill. Is this open? This looks like shit. That's getting a little bit more bearish. Ooh, failed to fill the gap. That's rough. BNED finna bust? I don't know. We'll come back and fill that gap in 2027. Baby bill action results coming in now. Yeah. Let's see what we got. 52 week, high rate 4.915. So flat, bid to cover 2.88. That's not really, that one's not very interesting for 1 year. Fed picked up 3.1 billion. IMF is concerned about medium-term U.S. fiscal trajectory. Breakdown incoming? Maybe. Failed to break out. Things are still kind of mid, but yeah, I mean, not breaking above 57 is a big deal. That's a big resistance. 56, 57. It's starting to move up a little bit, but we're not really getting enough support on the call side to move up, and the market maker is still selling any down ticks. Oh shit. House Budget Panel Republicans met with Fed's Powell, discussed monetary policy and inflation. U.S. Treasury Secretary Yellen, U.S. firms are not on a level playing field with China. I'll meet with Chinese officials this week to discuss anti-money laundering and balanced growth. Powell speaking at 1:15, but we have Barkin at 1 o'clock. Bid to cover was shit. ECB's Villeroy and Fed Williams start speaking in an hour. Momentum's getting ever so slightly bearish. But it's just like a little bit. Don't expect big moves on this range. Bulls are still trying to stabilize this shit. I don't know why nobody wants to buy the 35 through 45 put. It's like they're avoiding them like the plague. It's too much money, I guess. So little volume on them. Bulls are trying to buy the in the money call. I think the 50. Mino like the sloppy choppy. Yeah, it sucks. It's broadening a bit. We're getting bigger candles and a little more volume. So maybe on the back side of this we see a bigger move. Yeah, JPEG's 115. Anti-money laundering isn't laundering all that our elected officials do. Well, that's why they're able to advise other countries on how to do it properly. BNet October 0.5 buy rate is interesting if you don't think it'll go bankrupt. Yeah, yeah, kind of is. Well, I don't know if you'd want to do a buy rate though. Because you'd probably just end up getting assigned at 50 cents, right? Motherfucker. I don't think I want to play the upside here. Ooh, shorted again. $62. Like $9. Yeah, I'll just wait for Powell for that. Fuck that. Maybe QQQ is better. 30, 32. Not much. It's no FOMC. It's just Powell speaking at some Canadian conference. Will JPO talking to a Canadian banker really move the market? It depends on what he says about US policy, right? I would say it'd be less impactful than if he was speaking directly on US policy. Are we just gonna get rejected off Delta Neutral again? Delta Neutral is like $100 out of the money. Jesus fucking Christ, gas is $5.35 at Costco and NorCal today. Ouch. Volatility is just isn't very sensitive here. We gapped over the gap. I think it filled. Yeah, it filled. We have a new gap, but that's going to be higher. Okay. It's like $1,200 for a fucking 5% scalp is bullshit. Mm. Aquarium time? Yeah, I'm not playing this anymore. Just wait for Powell to speak. 5.99 and farther NorCal today. Downtown San Fran gas stations require a credit check and 6 months of bank statements to fill your tank. We gapped over the other gap. Perhaps synthetic wrong. I filled up in Costco for $2.99 a gallon. You live in Texas? I broke even, but lost my trading commission. Yeah, sounds about right. Fucking ridiculous. It's a, that's a little bullish. Mm, where would this break out? If they can push it, we'll be looking at a break above 70, which is 11 fucking dollars. Unreal. I'm not gonna play this anymore. 2 minutes. Well, we got to set up for a breakout, so I don't know if it's actually gonna go anywhere, but they're trying. They're also pumped, like we're getting a lot of delta and short calls that sold earlier at like 65, 70 are gonna get pressured here. The biggest problem is we can just get rejected off of 68 again, which makes it a little less tempting. But I don't have anything better to do. Well, we saw some covering on GoEV. It might be coming back a little. It's kind of tempting to go long on it. Come on, bulls. This is it. They got a clear path up to like 75 till they hit a put wall. If they can get the momentum, which is starting to pick up. That and bears don't just sell the fuck out of the calls they're buying, which is probably a risk. That's yesterday. Look at that fucking price differential from the same test earlier to now with the drop in VIX. Dealer delta on the 0 GT is just above positive here. It's gonna depend greatly on if they can hold this or not. Nope. Oh, nice. Gotta fill at my stop. Not bad. Alright, well. That was fun. I mean, not that much of a difference from Theta. Woo, $60. That was a pretty hard rejection. I'm gonna try to go long GoEV again. Maybe I can get calls for like 14 bucks. Bull hit 56 here, you're gonna pull back, then break up again off that handle. Maybe. Like I said, that was a pretty hard rejection. This has to hold 55 and 50, otherwise it's gonna fail. And open up, like, higher vol. Because you got a shitload of short puts sold, like, right here. And if those start squeezing out, this will collapse. How many 0DT puts am I buying for JPOW? I don't know. It's up to you. Any news for HE? Down 13% today. I have no idea. I don't really watch it. Got a good exit on that call, even though it was overpriced as fuck. Jesus, QQQ's rough. These sell-offs in tech are strange. Do they look like bulls push until they hit sell-off, then try to stabilize again? I mean, that rejection was really bad. They put a lot of effort into trying to get that breakout, and they failed. They might not recover so quickly. Looks like short puts will get squeezed on the downside. We're already starting to squeeze them. Look at vol. Big rejection. JPOW coming up in a few. It's JPOW is at 115. Let's fucking go 50-25. That's ambitious. But we might be able to retest 40. We'll see. Let's see. Let's see where this stabilizes. You're just touring these puts, aren't I? Maybe. For tomorrow? That's not so bad. Looks like Barrick's bouncing back a little bit. Oh. Huh. Just proxy filing more. Did the bear flag break down? Well, it broke up and then it broke down. Some could argue and say this is a Hawaiian roller coaster ride. Alright. I don't disagree with your argument. Let's see if this is getting more bearish, because we still need to squeeze off the rest of the puts there. I think we mostly squeezed off the 55 ones on the drop. It's a little bearish. A lot of delta fell off. Could probably get a continuation here. I would have a tight stop, but I think a continuation's possible. What's the bear confirm level on SPX? We're like right at it. It's 50, 50, 50. Our bear confirm? That would be 5,000. Like, well, 5,003 about. I'm a trading sideways guy in charge of the SPX again. Fucking seriously. Ugh. Even the tech that's doing good today is not doing that well. UNH is up a lot. So Dow NQ. Ooh, gold's back above 24. It's ES looking at. So ES failed 5111 from the. So 5111 now resistance. Well, on ES. It's 3 rejections from that spot. MQ only up 6%. Dollar at 106.30. 10-year at 4.655. That's pretty rough. Even with the pullback in yields, it's still got a higher low than last night. Correlations. So they're trying to push the dispersion trade. It looks like mostly in tech. And then USD JPY leverage is rocketing. Forward yield on vol is 5.1%. Bond volatility shooting it like straight up. Still barely pricing in above one rate cut. These dips and bounces might start to pick up a little bit more range as the delta decays off the near the money contracts. My sell limits get gapped over sometimes on paper trading. Do you have to worry about this with live trading? Yes. Depends on what you're trading, but generally speaking, yeah, you do. Any thoughts on MO below 40? No, not really. It's like a good compounder, but from like a tax perspective, it's okay. I don't hate buying it. It's just not my favorite. I don't think it has. It's kind of like a value trap. Like you get the dividend, but you're probably not going to get very much like sustained growth. Without doxing myself, my company does high-end audio video. I've been using WISA for years. Been DCing as they were looking rough. Up 250% today. It's still trash, but nice to see green. Fair enough. Apple moved down kind of quick. Already back to where it tends to get longed again. Yeah, Apple hasn't had such a hot day. It could be like a opportunity to start selling calls on it again. That's been quite good, above 70 over the last few weeks. Yeah, Altria is not really like my favorite. There's also like bad blood there for me. I bought it back in like 2020, and then it just like never really improved in price. Well, it did, but it was fucking way worse than everything else. Like I think I put like 36,000 in it at the time, and just ended up kind of collecting a dividend for a year without any real price improvement. So I got out of it kind of as quick as I could. I think it's great if you have like you live on fixed income or something. It's fine for that. Or something to like stuff in like an IRA, right? Like they're probably never going anywhere, but they're also probably never gonna see a period of sustained or substantial growth. What are we talking about? Altria? The only thing that I would be bullish on Altria for is if we get marijuana legalization. That would be the bull case for buying it under 40. No, O actually gets like a lot of price improvement when the housing market's doing well, right? O's probably getting destroyed right now. Yeah. REITs tend to be a really good short when rates are going up. I have a I have like a fairly big position in Alexander's. Um and I've had a stop on it for like a few weeks now, but it doesn't seem to be declining with the rest of the REITs, or at least not as much. They've been holding up pretty well. I was gonna sell at like 205 and I haven't hit my trigger. I know it's not your cup of tea, but I'd like to start a dividend port. Any good starting points? I mean, well, find companies with dividends. And generally you would buy them. I mean, it's not a lot different than value investing, right? You're just using your compounding. Like, so you're transferring some of the growth to accumulation versus, building out a growth portfolio. Dividend port's what keeps the gambling port alive. Yeah, yeah. Sometimes, I mean, trading's you got a lot of there's a lot of times where profitability is lean, right? So if you're smart, you take your gains when times are good and you put them towards stuff that will survive and do well, or at least produce income when things go south. And that's like what my dividend port is for the most part. I have to be careful with it for tax shit, but generally speaking, some amount of my trading gains every quarter go into that, and then I buy a bunch of shit. No, not like Rev. Rev was a degen YOLO play, and it was a beautiful one for months. We just got all hung up on the conspiracy. I'm not focused on just selling puts out of the money at $4 a pop. I mean, BNED's high risk, right? But if they successfully implement their turnaround, they are massively undervalued, right? I would say BNED is something more akin to what DFV would have bought, like his value style of investing. And when you buy those kind of like cigar butt stocks, a lot of them just die. Rev would have also been one, technically speaking. But they'd already filed bankruptcy, so the risk was a lot higher. BNet is super undervalued. Well, if they can survive, they are. No, not full port BNet weeklies. I like that they're getting some capital. It's arguably more important than the dilution, and they'll probably reverse split most of the dilution away anyway. So it's not gonna. I don't think it's gonna be like a big deal. I mean, the company makes like on average like 400 million, right, in revenues per quarter. So I think like the trailing 12-month revenues are 1.5 billion, and it's got a fucking market cap of $30 million. So I mean, it's if it can turn shit around, woo boy. If it can't, that's the risk you take. I'm down on my Pooty too. How is this possible? I'm just gonna assume that you bought it at the bottom and then didn't put a stop on it. Peanut's so cheap right now that the MM pays you to buy weeklies. Peanut turnaround time frame in your mind, 2 to 3 years. I mean, I think they could start getting priced up if they just they show moderate success with the programs they're currently implementing, right? And if legislation that's being passed stays on their side where they're like for the opt-in. The other cool thing about BNED, which is kind of fun, is that if the banks call their debt and try to force them into bankruptcy, the value of their assets is largely in those government contracts, and those contracts would then be canceled. So there's like almost no liquidation value in it. So the banks are incentivized to keep them well funded in order to ensure that they're able to meet their contractual obligations, which is yeah, it's kind of fun. I got 50% of my position on WISA before the halts. Ooh, nice. I mean, today's clearly a good day. I don't know what news they had, but oh, they got like a new deal with another TV brand, it looks like. And be careful, it looks like they do have a shelf available. Oh, they also just reverse split bigly. So some of this is probably the news coming after the reverse split. How come you're not into any marijuana stock ETFs? Even though so much stuff is coming up this year, DEA reschedule it any week now. That shit's not going to pass until the election's over. There's not going to be anything before then, I don't think. Just remember, kids, Amazon was a failing bookstore once. Yeah, I don't think this is the same, but if they could double their revenues to $1 billion a quarter, that's a $4 billion a year in revenues, right? Which I think their program offers them the opportunity to do, and then get their debt paid off and get some multiples priced in. It could be a decent value play. Burry's favorite in a recession. Yeah, he's been long Geo a while. Although I think recently he took some profits on it, if I'm not mistaken. Did you buy more BNAD? I doubled my position. Actually pushed my cost basis down a little bit. I was able to close out some of the in the money calls I sold too. Although I wish I'd sold a few more of them. Remember Berkshire Hathaway was once a manure company? Weren't they like a textile company? Still not AMD put ladder. Uh, I'm not sure. Hold on. uh, yeah. Uh, Looks like I got stopped out of the money put, but I still have the at the money put. Is there ever a Pickles Picks write up on being a no, too high risk. Yep, J Pound 35. Don't forget that Apple started in a mom's garage. This is a company with like $500 million in revenues every quarter. They're not in someone's garage. Is BNet the company that makes money buying and selling secondhand books to schools? They make money off like every. So the schools that sign up to their program, basically how it works is like you sign up for your classes and you get automatically charged for your books, and then they're delivered to you. I'm beating around the bush of these stocks. Get to the heart of it. When will shrimp resurrect their value in multiplayer online dragon and make us all shrimp millionaires? Uh, Honestly, shrimps, like, if shrimp had even remotely competent management, they could probably turn what they have into a very successful business. They're just not. I'm assuming there's no support anywhere down here. No. I mean, you have to assume that the support would be at like 5 cents, right? Funny you said that you doubled your position. I tripled mine at 23 cents a share. I mean, I don't really have a lot of exposure on it. Uh, I sold, I sold in the money calls when it ran after their prior earnings. And then I sold in the money calls again when it bounced, and I had some in the money calls now. So I've hedged off like most of what I've put into it. I think my cost basis is like after today it should be like 17 or 18 cents. So it's up. It's not negative anymore, but I have like I just don't have that much exposure overall. About 1,000 shares of BNED for the lulz. That's kind of how I feel about it. I got my interest from like some 6 month treasuries I was holding, so a little bit of money to blow. What's OI looking like on SPX? Boring as fuck. There's a put wall at 70 still. Bulls managed to reverse off the drop, but it could just fail again, honestly. I don't think momentum favors them. And this might be getting kind of near another top. I guess J-Pow could push an actual reversal here, but I think it looks shitty. Or for that guy that asked about paper trading, you probably gotta set your stops wider so you don't get gapped over, but you should also just, well, it's nice to paper trade in a brokerage, but there's a big advantage to just paper trading on physical paper. Just because paper trading software is just awful, generally speaking. Like most of the brokerages that offer it, it's not very robust. If I sell a credit bull put spread 50-55, then wait till later buy a 50. Hold on one second. I'll get to your question right after this, Pinecone. Sorry. All right. Where was I? So I sell a credit bull put spread 50-55, then wait to buy a 50-60 debit spread. Does that create a butterfly? Possibly entered at a net credit. Ignore if dumb question. Okay, so you're selling the 55. Yes, it would. I mean, you'd be legging into it, but yeah. It's not like a iron butterfly though. It's you might be able to establish it in a net credit. Oh Jesus Christ! Hold on. Oh. Well, they can do a butterfly net credit means you locked in minimum profit. Yeah. Yeah. What's your covered call? Buy right on BNet at. I just grabbed 1,000 shares. I'm not doing any buy rights on it. It's at like 20 cents. The 50 cent isn't even worth it. Do you have any Vega put positions? Oh, no. None at all. SPY's gapping around like mad. There's not a lot of like liquidity here at spot. And it's just like a lot of short strangling that keeps getting squeezed off on the up and down side. No, no, I just bought some calls at 50 cents. I mean, Gherkin diluting 900 million shares is a lot. Even if fair value is 5 a share, 50 million shares at like 27 cents would be the price, assuming it ran 600% before dilution. I'm thinking more in terms of market cap. Assume market cap of 400 million. And you're at like 42 cents a share, even with the dilution. Anyway, the dilution's gonna get reverse split off, right? That's gonna be like the next step is meeting listing requirements. So you know what, 95 uh 95 million in equity capital. $34 million in outstanding principal and 325 million in the revolving credit facility. It seems like an easy way for the business to dump bags on the equity holder and keep afloat. Well, they're offering I mean it is, right? Partially. But they're offering over subscription rights. So in institutions are gonna come in and snap it up at 5 cents a share. Then you assume that they'll reverse split in line with whatever comes after that. It's $1 billion debt. Is that even enough though? I mean, they think that they still make like $400 million a quarter, right? And they're projecting that they can like double those revenues over the next few years. So it's like what 1.15 billion in assets to, well, now less than a billion in debt, right? I think their total debt's like 500 million. So you're saying is BNet is your hedge for when they cut rates? No, it's not a hedge for a rate cut. I legitimately think that the program that they're putting in place is going to generate them a lot of revenues. And I think they'll be resilient to any economic downturn that we might experience because largely their business is focused on education. I think college admissions will pick up if we go into a period of extended economic contraction. So I actually think it's like a decent business. I think they could easily generate a billion a year in revenues, given if they can survive, right? I think the competition in the space is almost non-existent. Do you not want to average? I doubled my position today. I got like a what's the bear case? They fuck it up. They fuck it up. They lose their contracts. Banks eat the bullet. You doubled your position on DFV day? The day he doubled his position? What? Okay. Cool. He doubled his position on April 16th. That's the. Alright. GME historians are a thing now. I see that. JPO should do his entire speech in an Australian accent. Blame the koalas for rising inflation. That should pump the market. Maybe. With the cost base of 40 cents and the options chain being so bad for cover calls, is it just smart to sit on shares and wait a while? Probably, yeah. Worst timeline? I'm like kind of sad that I doubled my position today now. Did you talk about gold at any point today? It's back above 24. Are you talking about Barrick? Barrick had like slightly worse projections for quarter one than people were hoping, but it wasn't really that bad. Yeah, really cringe timing, bro. Yeah, I see that. Well, I mean, why? Cause it's cringy. Jimmy looks dead. I don't know how else to describe it. There's so little fucking delta on the options chain, and all of it's sold calls. My BNet cost basis is 120. What should I do? Um, that's up to you, man. How could you do this to BNAD? You've got to look up more. Sorry, I have my desk at like in a weird position. Do a split on your shares. Here's a counter proposition for you, Poopy. They now have enough money to fully roll out a program which is estimated to double to triple their current revenues. And they're not going to default. At least not in the immediate future. I'm up $5 on my BNet position, which is more than I gained after 4 years of GME. I'm just gonna stare at it daily and say I should not have bought this piece of shit the minute it came out of Gherk's mouth. You mean when me and Dork were trying to sell, and it was running super hard? Yeah, that was probably a bad time to buy it. Bro, I made like 100% on BNet that week. Nice. I was in it like $1 before it ran to 2, and then I sold $1 covered calls, and it tanked. I tried to get Dork to do that too, and he could have also had free shares. How much would you be willing to loan me to forex my revenues? I'll pay you back. Someone will give them, right? Someone will buy those shares. It's a couple 100 million, right? The risk reward is huge. I had approximately 2 minutes to sell CCs above my cost basis. People felt that way about AMC at one point too. Yeah, but they were idiots. Nobody likes movie theaters. I haven't taken a position on BNet yet. I was waiting until it announced bankruptcy. That might take a little longer now. Give it to me straight, Kirk. Is this gonna break down? Maybe. You excited for another 50-50 test? Because, I mean, it doesn't look like it's going to be much better than that. I'll take a 50-50 test over this garbage. It's going to be the world's slowest 50-50 test. Well, actually, Powell's going to start speaking soon, right? I should get something to eat, so I'm ready for the Powell speech. That's what I'm going to do. Momentum is slightly bullish in the short time frame, slightly bearish on the longer one.
Nothing looks all that exciting. Look for like lower lows here, but it looks like it could just kind of bleed until the Powell speech and then snap back to neutral. So probably not anything worth playing. I'll be back in a few minutes. I'm gonna make some food.
Today's the opening. Our relationship with Canada. Now, a lot of the discussion about the U.S.-Canada relationship tends to focus on its importance for Canada. Trudeau the Elder's famous comment about sleeping with an elephant. But Canada is our largest export market. Almost 20% of everything that we in the United States send abroad into this world of 8 billion people goes to the 40 million people in Canada, who are only 1/2 of 1% of the world. It is the largest and most comprehensive two-way economic relationship among any two countries in the world. The evolution of the energy economy of global importance will be heavily influenced, perhaps determined, by decisions that our two energy-producing nations make. We have a unique role in being advanced financial economies, using a lot of energy, but also significant energy producers, and can balance the effects on economy and society of the choices that we make. And on top of that, Canada is a key U.S. ally in the international financial architecture. I've spent 3 different tours of duty in government service, where a big chunk of my job was international financial diplomacy, and we could always count on the Canadians being sane, solid, and punching way above their weight. And yet the U.S. tends to take it for granted. And my experience in life is that the good things we take for granted, we tend to mess up. So my hope is that with this series of events, we can be part of helping focus folks in the United States on the importance to the U.S. of this relationship by finding speakers and topics that will have a very broad appeal beyond the usual suspects who focus on our relationship with Canada. And we certainly have that with our event today, which includes 3 of the most significant economic leaders of our two countries.
50% of comedians come from
Canada. Our moderator
Canada.
today is, well, when you look in Wikipedia under Renaissance Man, there is an inset photo of Bill Morneau and nobody else. Recognizing his significant achievements across politics and policy and business and philanthropy, he's the former finance minister of Canada, playing a key role in shaping sustainable economic policies of the Trudeau administration, including Canada's economic response to COVID-19, and a key reason for Canada's aforementioned above-weight punching in international diplomacy. As a business leader, he grew the multinational human resources firm Morneau Shepnell from a family business to over 4,000 employees and the largest human resources provider in Canada. As a philanthropist, he's worked to support the arts, help at-risk youth, improve access to health care and education all around the world, including founding a school for Somali and Sudanese girls in a UN refugee camp in Kenya. And as a policy thinker,
I just want to correct something here.
This Washington Forum, he's chaired the
The picture for Renaissance Man on Wikipedia is Danny DeVito.
A policy book that it is several cuts above the typical former official's post-service book. I put it up there with Robert Rubin's In an Uncertain World. Anyone who has ever served in any government of any country at any level at any time will immediately recognize the honesty and intelligence and savvy that he's brought to thinking about.
All the comedians are from Canada because their country's a joke.
All of us, I highly urge all of you to read it. Tiff Macklem is the governor of the Bank of Canada, and another of the reasons for Canada's substantial above-weight punching in the world. In addition to his role as governor, he's the chair of the group of governors and heads of bank supervision. That's the oversight body of the Basel Committee, rather high profile these days, and he is co-chair of the Financial Stability Board's regional consultative group for the Americas. He's a distinguished economist, having headed the most important division of the bank's economic staff in the early 2000s, having played a critical role in Canada's response to the great financial crisis in his post in the Canadian Finance Ministry in the mid-2000s. He's been a senior deputy governor of the bank from 2010 until his appointment as governor. He's also been a distinguished academic, having served as dean of the Rotman School of Management at the University of Toronto. And our final panelist is Jerome Powell, chair of the Board of Governors of the Federal Reserve System. It is a weird task to introduce Chair Powell. It's like introducing Henry Kissinger. How do you do it without looking absurd? His doctoral thesis on Metternich received very high marks. So just let me say this.
Low
Here is an ante
blow.
room off the main boardroom in the Eccles building, which is the Fed's true headquarters building. They're currently slumming it in an annex, where the portraits of all the Fed's chairmen hang. And as you look around them, it is borne in on you that none of them will have been as consequential across as broader
What's
range of matters
Canada?
as Jerome Hayden
I think it's
Powell
a
in managing
Canada. I'm
remarkably
not sure.
low inflation and high employment of the pre-COVID period, in the world historical response to both nationally and globally to the COVID event, in the first major review and explanation of a formal monetary policy framework for the Fed, and in managing the quite effective response to the most significant inflation in almost half a century, but one in which many of the traditional guideposts could not be helpful, requiring very creative thinking and deft management of the extremely well-meaning but hydra-headed body that is the Federal Open Market Committee. So with that, let me thank you again for coming.
Can I just say something? I don't know who this guy is, but what a cunt.
Well, I want to start by thanking you, Randy, for
He's a clown?
for both
Okay.
for that very, very generous set of introductions, and also for your willingness to step forward as the co-chair of the Washington Forum on the Canadian Economy. So we very much appreciate your esteemed leadership, and one of the key reasons we're here today is due to that. So really appreciate it. I'll just say
Hydra's
personally, one of the things I like
Jerome
most is you
Powell's
said Canadians
nickname
were
at
sane.
swinger
So,
events.
that's a pretty good starting point, I think, for our discussion here today. So with two esteemed panelists, I won't really be speaking much. I want to give both of you gentlemen an opportunity to talk a little bit about your respective economies, and I guess also recognize that we're here to talk about the Canada-U.S. relationship and what is both distinct and different about our economies, but also what we share.
Stop trying to put yourself on an
maybe
equal
with that, I could
playing
start
field.
with you,
It's embarrassing.
Governor Macklem, and then we'll talk to Governor or Chair Powell.
Just
Well,
say
thanks, Bill,
thank you
and,
and that you're
better
sorry
call me Tiff.
and wrap this up.
It is a pleasure to be here, and thank you and Randy for launching this, for inviting us both. I am very pleased to be here to say a few words about the Canadian experience, and I always enjoy comparing notes with Chairman Powell. Now, as Canadians, we invariably compare ourselves to Americans, and maybe it's human nature, but we tend to focus on the differences. We've got different systems of government. We're bilingual in Canada. We have 3-down football, and we even have very colorful polymer banknotes. And certainly our climates, I think, are certainly the IMF meetings are always a welcome first blast of spring for the Canadians. Our economies obviously have much in common, but again, we often focus on the differences.
I believe you
If look
did
at
call him and
growth
Randy.
in Canada and the United States over the 20 years leading up to COVID, remarkably, the average was exactly the same, average 2.2% in both countries. The sources of growth, though, have been a bit different. In Canada, we've grown more by adding workers. Our participation rate has risen more, and we've had proportionally higher rates of immigration. In the United States, adding workers has also been important, but increasing output per worker, or productivity, has made a relatively larger contribution. And I will admit, in Canada, we look at U.S. productivity growth with some envy.
It's
and we
called
do
inflation. Get
What
good.
can we learn from the U.S. experience? We are concerned about productivity growth in our country.
Print more money.
Turning to the financial system, we both have strong banking systems, but the structure of our banking systems is quite different. In the United States, you've got a lot more banks than we do in Canada. In Canada, we
banks.
have 5 large national banks and a number of important regional players. The structure of our mortgage market is also somewhat different. In Canada, the typical mortgage is 5 years. In the U.S., typical mortgage has a term of 30 years. And our banks in Canada tend to hold mortgages on their balance sheets. U.S. banks securitize a lot of their mortgages. Despite these differences, our systems are very integrated, and indeed, a number of large Canadian banks have large operations here in the United States. Our pandemic responses were also mixes of similarities and differences. Broadly speaking, the paths of our two economies were pretty similar. we both cut interest rates very dramatically to effectively zero to support the economy through the pandemic. Then we both raised them very forcefully as inflation rose rapidly, and we've both seen inflation come a long way back. Growth has been more resilient in the United States, though, through this tightening cycle, and I think that's partly related to the stronger productivity growth I mentioned in the United States. And it may also be related to the fact that monetary policy may be having a bigger impact on households in Canada because of the different structure of our mortgage market. More of our mortgages have reset in Canada, so more people are feeling those higher interest rates.
I feel like this is like Canada's bid
And
to beg
that
JPOW to
has
stop
restrained
fucking it
household
up for
spending
them.
more in Canada. In each of our countries, I do want to underline that, we gear our policy decisions to our domestic monetary policy mandates. And in Canada, we have our own currency, we have a flexible exchange rate, so we can run our own monetary policy. So simply put, we don't have to do what the Fed does. We can do what Canada needs. I do think, though, we're looking at the same things and asking ourselves the same questions. I think we both need to feel confident that we're clearly back on a path to 2% before it would be appropriate.
I'm not sure he
to reduce
fully
interest
understands
rates.
long.
Last week
Typical
in
man.
Canada, we held our policy rate at 5%, where it's been since last summer. We did stress that we are encouraged by the recent progress we've seen on inflation, and we want to see it sustained. And just this morning, Statistics Canada published the March CPI. As expected, headline inflation came in close to 3%. We have seen gas prices in both our countries move up. Importantly, though, measures of core inflation did tick down again, and that does suggest that underlying inflationary pressures are continuing to ease. So we continue to be moving in the right direction. The other thing I want to underline is that in the conduct of monetary policy, we do spend a lot of time looking and understanding what is going on in the United States. U.S. economy has a very big impact on the Canadian economy. We also watch the U.S. economy closely, particularly through the extraordinary period we've all been through.
Have some respect. This guy's driven 50
the more we
cents
understand what we have in common
of index
and
movement.
Differences, the better we can learn from each other's experience. And let me just close on a few words on just how integrated the Canadian-U.S. economy is. And Randy, you highlighted some of the key facts. I would totally share your perspective. I think the economic relationship really is the model for mutually beneficial open trade and investment. 77% of Canadian exports flow to the United States. And as you underlined, what less people know is that Canada is the United States' biggest export market. 17%, or as you said, almost 20% of U.S. goods.
That's because no one wants to live in your shitty country.
To Canada. If you look at foreign direct investment, there is a similar two-way dynamic. In 2022, more than half of Canadian FDI went to the United States by far the largest share of our FDI. That was roughly $43 billion. In the same year, $50 billion of U.S. FDI came to Canada.
Spilled that water.
It's a pretty balanced relationship. And I think what these numbers underline is just how close that economic relationship is and how it works in both directions. And the final thing I'll say is, when you look forward, we face many of the same structural challenges. Our labor forces are aging. There's going to be a big challenge with new technology, training, and making sure we have the skilled workers our economies needs. Climate change is affecting both our economies. We're both grappling with shifting trade and investment patterns globally.
Is this guy's first name Tiffany?
Across both our countries.
I don't see a period there, so I'm assuming it's just Tiff.
Are increasing global uncertainty. And for all these reasons, I am very glad we're having this discussion. We do have much in common. And Randy, as you underlined, when we work together, we can get a lot more done.
Like Biff, yeah. His name's Richard Tiffany Macklem. 100% serious. Wait, really?
That's a great place to start. Chairman Powell, really interested in hearing your perspective.
Another place to start is to say, why don't you call me Jay and call Tiff.
Okay, I know I do it behind the scenes. I'll do it in front of the scenes too.
Great. So let me start by thanking Randy and Bill and Xavi and Tiff for this. It's great to be here today. I want to echo what Randy said about the mutually beneficial, respectful, great relationship we have with Canada, economically, culturally, and I'd also like to echo, I thought Tiff did a great job talking about the similarities and differences in our economy, our financial markets, the challenges we face in our policy stance. It's almost as though you somehow had a copy of that part of my remarks, Tiff. So I'm not going to repeat that, but what I will do is talk, if I could, a little bit about the U.S. economy and where we find ourselves right now. So as I think Randy pointed out, the performance of the U.S. economy over the past year has really been quite strong. We had growth of more than 3% last year as rebounding supply supported both robust growth and in spending and also employment, alongside a considerable decline in inflation. The more recent data show solid growth and continued strength in the labor market, but
That was
also
timed
a
well.
lack of further progress so far this year on returning to our 2% inflation goal. So I'll say a little bit about our two mandate goals, maximum employment and price stability. As I mentioned, the labor market remains very strong. Payroll job gains have been strong over the first quarter, averaging just a tick above 275,000 per month. The unemployment rate has been below 4% for 26 consecutive months, which hasn't happened in more than a half a century, the longest streak of its kind. Strong demand for workers has been met by a substantial increase in the workforce due both to rising labor force participation and a substantial increase in immigration, as indeed Canada has experienced as well. So even with this strength, by many measures, our labor market has been moving into better balance over the past year. The ratio of job openings to unemployed workers was extremely elevated in 2021 and 22, has now moved back down to levels just above the pre-pandemic era. Surveys of workers and businesses indicate a normalizing labor market. So do the rates of both quits and hires. And broader wage pressures also continue to moderate, albeit gradually. So the overall picture for the labor market is one of real strength, but gradual normalization. Turning to price stability, our inflation mandate. Inflation, of course, declined quite significantly over the second half of last year, over the whole year, but particularly in the second half. But 12-month core PCE inflation, which is one of the most important things we look at, is estimated to have been little changed in March over February at 2.8%, and the 3- and 6-month measures of inflation are actually above that level. So we've said at the FOMC that we'll need greater confidence that inflation is moving sustainably toward 2% before it would be appropriate to ease policy. You know, we took that cautious approach and sought that greater confidence so as not to overreact to the string of low inflation readings that we had in the second half of last year. The recent data have clearly not given us greater confidence and instead indicate that it's likely to take longer than expected to achieve that confidence. That said, we think policy is well positioned to handle the risks that we face. If higher inflation does persist, we can maintain the current level of restriction for as long as needed. At the same time, we have significant space to ease should the labor market unexpectedly weaken. Right now, given the strength of the labor market and progress on inflation so far, it's appropriate to allow restrictive policy further time to work and let the data and the evolving outlook guide us. Come what may, we remain strongly committed to returning inflation over time sustainably to 2%.
Well, thank you. I think that's a really important frame for our discussion today. One of the things that I remarked on when I first got into public life was how often I saw my international peers as we moved around. And when I see the two of you on stage together,
I love how
know
we
that
priced
often
out
see
another
each other
5
at
points in
G7
rate
and G20
cuts
meetings.
before he
I think
said
it'd be quite
anything.
interesting for the audience to understand, you know, how collaboration happens or doesn't happen internationally, how central banks work together or don't work together. So, you know, maybe I could ask you, Jay, to give a perspective on how that happens from your vantage point.
Sure. So to give you an idea, we do meet quite regularly. So Tiff and I attend 2 G7 meetings per year for ministers, that's finance ministers, and central bank governors. We don't attend the leaders meeting, but we attend, in the United States, but we attend the meetings with the finance ministers, which Bill was, and also 2 G20 meetings. So that's 4 meetings per year right there. We also have 6 meetings at the Bank for International
That is the
Settlements
VIX.
in Basel. One of those is now virtual, but we're in,
Isn't it?
and that's only central bankers, no finance
Yeah.
ministries. So it's all central banking stuff. And, you know, it's economics, it's financial regulation, all those things. We also come here to Washington, or every third year we go someplace else, twice a year for the IMF World Bank meetings, which is kind of what everybody's doing in Washington right now. So it's a lot of meetings. What do we do at these meetings? Fair question. Essentially, the central bankers are having an ongoing conversation about what's going on in their own economies and their own financial markets, their own regulatory world with each other. And we're also talking about the big global issues of the day, as you would expect. So some of which are really the business of the elected government, not the business of the central bankers. But we have that discussion. It's more or less ongoing. We're seeing each other all the time.
Hilarious.
They're very informative, these discussions, and they really are, for me anyway, part of the way that I get to thinking about what the right policy is for the United States, is to hear what is going on around the world, what's happening globally, and how are people thinking about that. So it's very, very useful, particularly, though, given our close cultural, financial, and economic ties with Canada. Those discussions are especially fruitful and important, and I have regular conversations with Tiff. By the way, I do keep very close track of the actions of the Bank of Canada. I read Tiff's press conference transcripts carefully and pay close attention to that. Tiff did mention the similarities and
Why don't you try
differences.
not kissing Tiff's ass?
I'll say one more thing, which is we go to Basel, as I mentioned, 5 times a year. You're a long way from home, and we're there for 4 or 5 nights, and there are usually 1 or 2 nights off. So we go looking for someone to have dinner with, and very frequently we wind up with the Bank of Canada delegation who are really good and very funny and a lot of fun together. So we have a very close relationship with the bank and great respect for that institution, as I'll have a little more to say about lately. One other thing I'll point out, though, about our relationship is we did do, as Randy pointed out, our first review of our monetary policy framework really ever. And we looked around. The Bank of Canada also does regularly. I think it's every 4 years. In any case, we really looked to the Canadian model and other models of how to do that. We talked to people at the Bank of Canada about how their regular framework review went. So we really benefited for that. So that's what I'll stop there.
And Tiff, similar perspective from Canada?
Yes, I mean, I'll just add a little bit on as Jay outlined, certainly from my perspective, one of the best parts about this job is we do, the international community, the central banking community, it's not like a commercial bank where you're competing against the other bank. We're all in this together. And if we get it right, we all help each other. So there is a considerable openness. And, as Jay outlined, I think there's a few.
Did he just say they recently did the first review of U.S.
Canada,
monetary policy
we have our own
ever?
group at the Bank of Canada that analyzes the U.S. economy, forecasts the U.S. economy. It's very important to Canada, but the Fed's group is a lot bigger. They got a lot more experience. Hearing what the Fed has to say is incredibly valuable for us. The other thing we do, though, is it's more than just the data and the forecasting. It's thinking through the scenarios together. What risks are on your mind, Jay? What do you think could go wrong? What are the scenarios? How would we handle it if this happened, if that happened?
Tiff's allowed to buy
Being able to
puts,
put your
isn't
heads
he?
together and think through the risks, the scenarios, the strategy. There are also a number of really, I would say, sort of behind the scenes, very central banky technical issues that nobody really thinks about except central bankers. But what are the mechanics of QE? How do you exit from QT? How many settlement balances are we going to need to? Fortunately, those are things most people don't have to worry about. They are critically important for the implementation of monetary policy and that sort of plumbing working of the financial system. And being able to talk to people who are thinking about these things as much as you are is hugely valuable. And then the last thing I will say is, there's some things that we're only going to succeed if we do together. The obvious one would be financial supervision and regulation. Our financial systems globally are highly integrated. We were deeply reminded of this in the global
Has he
financial
said
crisis.
synergy yet?
What happens in other countries affects all of us. And money flows across borders. So, we have to do that together.
One way.
Or it's not going to work.
Well, maybe we can drill into that for a minute. You know, obviously we recognize that most of your work is focused on the domestic markets, but in times of crisis, there's real challenge, as you mentioned in the COVID period, the global financial crisis, you know, that you were engaged with, Tiff, earlier in a different stage of your career. And for me, it was remarkable, the number of interactions with counterparts around the world during those crises. So maybe a question to both of you is, you know, what kind of interaction happens during periods of crisis? What doesn't happen? Are there things that we should be thinking about differently in order to prepare ourselves for those challenging moments and making sure that the financial system is resilient? So again, maybe over to you, Jay, to react to that and hear your thoughts.
Sure. So, you know, our economies, our financial markets, all of our institutions are deeply intertwined. And when there is a situation where there's serious stress, you need to get a global perspective. You need to get perspective around the world. And you have to do that very quickly. And we, of course, can move quickly and effectively on the domestic front. But what the thing that you figure out in those times is that all the time you spent at Basel and at the G7 and G20 meetings, you know your colleagues, you know and trust and respect their judgment, and you don't have to go through that phase of gaining trust in people. You understand each other, you speak the same language, so there's a lot of communication. The level of communication is pretty high
You say
anyway.
other
but
countries
during
are
crises,
affected by
it
them,
goes-
not exclude
it
the
goes
U.S.
very high. You're constantly talking to I'm
Delusional,
constantly
I
talking to,
assume. He seems,
other
Tiff
central
seems
bankers
very
around the world, also
nationalistic,
political leaders,
almost like a
in
Swiss
our
banker.
government, and that sort of thing. So that happens a lot. The sense of what you're doing, again, is mostly sharing information and ideas about what to do. There may be a proposal that people are looking at, and you're talking about that. So it's very useful. I say one thing to point out is it's less about coordination than it is about talking and understanding for one reason, or at least it was during the pandemic, and that was because almost every country's interest rates were very close to zero when the pandemic hit, and so there wasn't policy space for most economies, most central banks, to do a big coordinated rate cut. We did cut
Ooh,
very
dollar's
quickly
going to new highs.
zero, but I think we were higher than almost any other nation in terms of where our policy
10 years
rate was.
almost
But,
at 4.7.
anyway, there's a lot of communication, and those relationships that you built up really do help at that point. In terms of what you asked about learning, what have we learned? You know, I think that the pandemic's going to teach a whole lot of lessons over time. I still think it's too early to say what they are with confidence, and I'll point out, look, the pandemic has surprised us over and over again, most recently in the United States,
Bounces
the
not
remarkably
bullish.
strong performance
Not
of the economy at a
extremely.
time
It's
when
a little bullish.
virtually all economists were expecting a recession. So I think if you'd asked
We're kind
for
of
the
just
lessons of the
at the
pandemic
neutral
a
mark.
year and a half ago, you'd get a very different answer.
So-
Now, I think in a year or so, we'll have a lot more answers. It is a unique set of circumstances, and we're still learning, I think. But we will try to learn those lessons. Different point, I would say, about the bank stresses, another crisis, at least here in the States. I do think we can and have learned the lessons of the stress of early last spring. And I would point to a couple things that we embraced pretty forthrightly. One was that supervision was not tightly focused on the right things, was not proactive enough, was not forceful enough, and we've tried to take steps to remedy that. I also think there will be some regulatory initiatives for banks of that size and with those characteristics in time. So I do think those are lessons that we have learned.
And from a Canadian perspective, similar lessons or different ones?
Yes, I think there are similar lessons. Maybe I'll just give a couple of other examples. First though, I will just underline, you know, when a crisis hits, you're faced with a situation, you have to make decisions, and you have very limited information. The other reality is you have a pretty narrow window to act to be really effective. And for both those reasons, you know, being able to speak, you know, directly to Jay, to connect with our other colleagues, finding out what's happening in their jurisdiction, how are they thinking about it, what do they see as the options, it is hugely important in a crisis. And that it's a little more, though, than just information sharing. I mean, I think it helps us avoid unintended consequences of our actions. Sometimes you do something and it works for most parties, but not one party. And in a crisis, you know, it's the weakest link that can take you down. So you've got to be careful. It also, I think, boosts confidence in the system. If we're acting in a way that is coherent together, it boosts confidence. It looks more like a plan than a haphazard policy response. Just to give you a couple of examples, I wasn't actually governor at the start of COVID. Jay was there. But certainly looking at it from the outside, the coordinated actions of major central banks to reopen fixed income markets, providing liquidity, providing market making of last resort in scale. It reopened core functioning markets. And by all doing it essentially at the same time and all working in scale, the whole global market restarted. If that had not happened, this crisis would have been a much deeper and more severe crisis. And then the other one I'll highlight is coping with the inflation as we came out of COVID. By all being resolute in our commitment to restoring price stability, by all matching our words with forceful action, raising rates rapidly, we all helped each other. I mean, it helped reduce global inflation in goods, which was really the first part of the inflation surge, and it helped keep inflation expectations in all our countries better anchored. And I think it is a key ingredient in how we have all managed to get inflation down a long way back without causing recessions in our economies. And the last point I'll just highlight is something you said. Occasionally this coordination is very explicit. So for example, at the time of the global financial crisis, there was a coordinated G7 interest rate cut. I remember clearly because it happened at 3 o'clock in the morning in Canada, which was a little bit of a technical challenge. But most of the time, it's not explicit coordination, but it is those conversations. It is that shared information. We have similar objectives, similar goals, similar tools, and we're sharing information, and that leads to a coordinated response.
Well, maybe you could spend a little bit more time on that from the Canada-US perspective. So Randy mentioned in his opening comments the idea that when you're in Canada, you're living next to an elephant. And I think a lot of Canadians would assume that that Canadian policy has to take into account U.S. policy. So maybe could you give us a perspective into how important that is for your deliberations, and how that factors into decision making, the U.S. approach?
Well, look, I think it's pretty clear that our U.S. economic relationship is by far our most important relationship. Our economies are highly integrated. 35% of our GDP is exports, and 75% of that goes to the United States. So multiply, that's a big chunk of our GDP. Our financial markets are also very integrated. In fact, yesterday I was in New York, and when you go to New York, you are just reminded how integrated our markets are. I was at the New York Stock Exchange, and all over are cross-listed Canadian companies on many of the screens. Our financial systems are very integrated. Our banks have, most of our large banks have operations in the United States. Our pension funds are big investors in the United States. So we do spend a lot of time understanding what's going on, trying to understand what's going on in the United States and looking at the implications for Canada. There are, though, I highlighted in my opening remarks some differences. Another important difference I didn't focus on is, both our economies have big manufacturing sectors, big service sectors, large commodity sectors. But the commodity sector in the Canadian economy is quite a bit bigger than it is in the United States. Oil and gas, agriculture, forestry, mining, fishing. 40% of our exports, 13% of our GDP. And the commodity cycle can be quite different. And we have a flexible exchange rate that does help absorb the differences. And I think it's an important reason why historically sometimes our monetary policy do differ. Our cycles are often quite similar, and certainly through COVID, we had a similar shock and a pretty similar cycle, and our monetary policy has been quite similar. There have been other episodes, though, where
30% of the
particularly if the
GDP is
commodity cycle
fishing.
different, you'll see
Ah,
monetary policy
hilarious.
diverge.
It's fishing
somewhat
and
from the
fishing
United States.
equipment
There are
sales.
limits to how far it can diverge, but as I emphasized, we have our own currency, we have a flexible exchange rate, and that absorbs the differences to allow us to gear monetary policy to what we need to do in Canada.
And Jay, from your perspective, obviously the U.S. has an outsized role in the global economy, and I guess we'd be interested in understanding how much time do you deliberate on what your actions will have as reactions, and how much do you think about what's happening with global markets as you come to your conclusions?
So I'll start by saying that each central bank serves a domestic mandate, which is, in the case of Fed, is using our tools to achieve maximum employment and price stability for the benefit of the people we serve. So it's a domestic mandate. But in the case of the United States, we fully realize and appreciate that our decisions can have significant effects on, not just on Canada, or Mexico, but on countries around the world. And that's all the more so because the dollar is the principal reserve currency, which strengthens the transmission of our policy through the global economy. So we also know that that those effects on global demand from our policy changes can have an effect on the United States as well. That can rebound to the United States. So we're very, very aware of all of that. And for one thing, we try to be very transparent and predictable, given the flow of data and events. I mean, you have to move quickly sometimes, but we do realize we have a special obligation to be predictable and transparent, and that benefits us in doing that as well. So international spillovers, of course, are an important consideration. We do track that. Ultimately, though, we think over time, the most important thing we can do to support the global economy is to deliver on our mandate of price stability and maximum
Deliver on your
employment here in the
inflation,
United
right?
States.
And is that, have there been changes in this current cycle that have driven any differences? I mean, you've talked about the different drivers for inflation this go around from previous periods of inflation. So do you think about it differently as you approach these things?
Yeah, well, specifically on inflation, I do think this is different. This is not simply the more standard case of overheated demand, which has been the typical thing in the post-war era for the U.S. economy and other major Western economies. There are similarities and differences, and I would characterize it this way, that the inflation that arose suddenly really in the early part of 2021 as economies reopened resulted both from constrained supply and also elevated and rechanneled demand from services to goods. So if you remember, and you I'm sure will, there were unexpected widespread shortages and supply chain failures.
No big
not
changes
seen
in OI.
recent memory.
Everything still looks pretty
In the
flat.
US, several million people had left the
Right when
labor
Powell
force,
started
creating a
talking, we
severe
got a
labor
bunch of
shortage that was more fully felt.
We got a
once
bunch
the
of short
economy
calls that
reopened,
came in.
leading to a huge
So we got a little
spike
squeeze off in the
wages
short
but
puts, and
also
then
in,
now
the
we're just
ratio of
back
job
at neutral
openings to unemployed
again.
workers. So very unusual situation. Households had elevated levels of savings, and demand was very, very strong as well. So we thought, what's different is, have thought since we've understood the situation, that restoring price stability would require both the unwinding of the pandemic-related distortions to both supply and demand, as well as the effects of tight monetary policy on demand, which would give the supply side time and space to recover. And we think today that
Losing
we're seeing those two
50
things working
is
together to
more
bring that
bearish,
end about.
obviously.
And you saw that, I think, in 2023, which was really...
I don't think. I mean, what the market's looking
in a
for
large
out of
way,
this
a
speech is
supply-side
Powell to
story.
give confidence
What
in one
happened
narrative
was,
or another, right?
The supply side really recovered in 2023. We thought that it would recover.
He's
in
not doing a
2021.
lot of that.
And in
So
2022, I was beginning to lose hope. And then in 2023, you saw the shortages and the issues with the trade pipelines not fully resolved, but largely resolved. You saw the U.S. labor force shortage alleviated by both higher participation among people who had dropped out of the workforce, but also from immigration. So that was the year of the supply side recovery. And you saw the core inflation rates drop by 2 full percentage points in the face of very strong growth. So that can only be explained by the enormous increase in potential output, the supply side increase over that year. So that's how I would say it's different this time.
And Tiff, maybe you can tell us how it's different in other ways in Canada. So we're talking about the similarities and the similar approaches to dealing with inflation and the positive results. But we've seen a divergence in Canada with respect to growth. So clearly there's some differences too. Maybe can you reflect for people what those differences look like and what the ramifications are for you?
Yeah, I will focus on the differences, although I will stress I think the main story is the similarities. And as Jay outlined, what is so unique about this whole cycle is that supply has played a much bigger role than we're used to. And from a monetary policy perspective, we don't have as good line of sight to supply as we do as demand, and we don't have any tools to influence supply. Our tools work on demand. In terms of what has been different, if you look at the Canadian economy, growth was essentially zero in the second half of last year. And what that meant was the economy, which was very overheated, supply caught up with demand. In fact, it more than caught up with demand. The economy moved into excess supply, and we're now seeing the effects of that in terms of relieving price pressure. So, why did demand slow more in Canada and the United States? I think that is a difficult question. I pointed to a couple of things in my opening remarks. I think productivity growth in the United States has been a lot stronger. You've gotten more supply than we have, so you've been able to grow more with less inflation or less inflationary pressure. And then the second thing is I think monetary policy is having more traction in Canada because the structure of our mortgage markets, half of mortgages have renewed in Canada. And even if your mortgage hasn't renewed, it's renewing in the next couple of years probably. So you're thinking ahead, thinking, oh, when it renews, I'm going to have to be paying a lot more on my mortgage every month, so maybe I should be saving more money now. So we're seeing that effect. We've had weaker consumption growth. And certainly that's been somewhat masked by the fact we've had very rapid population growth. But if you look on a per capita basis, you can see household spending per capita, per family, has actually gone down, even though growth has not been negative overall. I think moving forward, we are actually seeing growth starting to pick up. The first quarter of this year looks pretty strong. We'll probably see some choppiness quarter to quarter, but overall we think that strength we're seeing in the first quarter will be sustained through the year, where we think on a quarterly basis
JP right at
growth is gonna be
155.
averaging about
Let's
2%
go.
per quarter through this year.
These fucking
partly
guys
what
are going to put me to
we expect
sleep.
see. We're starting to see some pickup in consumption. Partly it is the resilience of the U.S. economy that is supporting our exports. They've been very resilient. And then coming back to inflation, I think those, broadly speaking, the path of inflation is pretty similar, but you are seeing, I think, some of those differences in the dynamics of the real economy in inflation. Our last few inflation readings have been reasonably good, even though total's still close to 3. Core has been, the last few times ticking down, and if you look at the more timely 3 months measures of core inflation, there is some downward momentum in underlying inflation, and I think that reflects the fact the economy is in excess supply, and that is relieving those price pressures. We're certainly looking for evidence that's going to be sustained. That's what we're looking for right now.
Well, I know that both of you realize that one of the key things we were trying to emphasize today was the importance of the Canada-U.S. relationship, and I also really appreciate all of the comments on the importance of trade to both of our economies, trade between our two countries, and foreign direct investment. And so while you're not trade policy experts, and I get that your organizations, that's not the focus, I really appreciate you giving us a little sense of, how do you think about trade in economic terms and the importance of that, and how that factors into your economic outlook. And specifically, we're thinking about the importance of the agreement between the United States, Canada, and Mexico, and wondering how you think about that in terms of its impacts on trade in general, on labor markets, on supply. So maybe I could ask you, Jay, to give us any reflections that you might have on that and deliberations impacts.
So I guess I need to start by saying we don't do trade policy. We don't really comment on trade policy other than to say that it's clear that we have a mutually beneficial, large, substantial, ongoing, healthy trade relationship with Canada that we very much welcome. Maybe I'll add one more thing, which is I want to focus on a particular export of Canada that I think somehow we just desperately need here in the United States, and we can't get enough of it. And that is Canadian comedians and comic actors. I started to count the number of really great, funny people, and I limited myself to 10. So Jim Carrey, Martin Short, John Candy, Mike Myers, Norm Macdonald, Rick Moranis, Dan Aykroyd, Catherine O'Hara, and Andrea Martin. And I could go on. So something's going on up there. Americans love Canadian. If that's Canadian humor, we absolutely love it. So send more. We can't get enough of it.
That's a small but important part of our trading relationship, I guess. Tiff, all jokes aside,
Yeah.
any comments from your perspective?
Yeah, well, first of all, as Jay underlined, we don't set trade policy, but let me just say, try to give you more of a picture.
I can't believe
first
you
of all,
wrote
just
those down.
Look at our two countries. The east-west border is the longest border in the world, and it's a long way across Canada. So it often makes a lot more sense to trade north-south than to trade across the country. And that's really, it comes down to geography in some sense. I mean, that's fundamental to the interties we have across our countries. Many Canadians are closer to fellow Americans than they are to fellow Canadians, just the nature of the geography. You look at what are the things that we buy and sell? Well, some of the biggest things, in Canada, we buy a lot of your consumer goods in the United States. We have a very two-way relationship on motor vehicles. You buy a lot of the motor vehicles we produce. We buy a lot of cars and trucks that you produce. Similarly, energy. We're both energy producers. It often makes more sense to trade the energy north-south than to ship it across the country. So we have a very dynamic two-way energy relationship. And you look forward and you think about how much electricity the world's going to need. I expect that relationship is only going to grow. Another element that is growing quickly, and maybe that's partly comedians, is the fastest growing part of trade is trade and services. Now, if you want a haircut, you still have to do it in your own
Does
country,
NAFTA
unless you want to go to New
freeway?
York to get
Yeah.
a really fancy one. But
Well,
sort
of.
But increasingly, a lot of services are highly tradable. The internet has completely changed how many things are delivered, and so you're seeing Canadians are increasingly importing a lot of commercial services from the United States. And then the final thing I'll say is
just say
on
inflation.
USMCA.
Why do they keep making up all these words like
obviously, for
productivity
both countries,
and labor
the
market strength
access is key.
and
The other thing I
consumer
would
goods?
underline,
Why don't they
though,
just
is
say
also
inflation?
The certainty about the market access. The certainty that American companies have that they'll have access to Canadian markets and Canadians will have access to American markets. That allows businesses to make investments.
Oh,
to
you guys can't even
deploy their
sell
risk
fucking
capital,
cash secured
to commit
puts.
to
Go
the
fuck
future.
yourself.
And it's that certainty of access that is really key to building investment. I'll stop there. Thank you.
Well, I'd like to thank both of you for taking some time with all of us. I think if we had looked back a couple of years ago,
We didn't get that
and
episode of
reflected on what we
Schoolhouse
were
Rock
thinking
yet
back
because it
then
went
might be the
under.
trajectory of our economies.
I
we
assume due to
probably
Arthur
wouldn't have had
Burns.
an expectation that we would have been where we are today. We would have expected more challenges than we've faced. And I think we need to recognize that the stewardship that the Federal Reserve in the United States and the Bank of Canada in Canada have been responsible for has made an enormous difference in citizens' lives. I mean, we're in a situation that is virtually our best case scenario. So it's probably not often enough that on stage you're recognized for that.
It's
important
short
work.
for
And I wanna thank
honorable
both
popcorn
of you
trader.
for all that you're doing for all of us in making that the reality. And also, I want to thank you for taking some time here. I mean, we are reflecting on the fact that in a couple of years, the U.S.-Mexico-Canadian trade agreement will be looked at again. And we want to reinforce the importance of working together, the importance of
Canada has a
collaboration and
bank,
cooperation,
apparently.
and really great trading relationships. So this is an important way for us to start this off, seeing the collegiality between the two of you, knowing how well people work together is really important for people. So thank you very much, and I know it's a busy week for you, so we appreciate also taking the time during this busy week. So thank you.
Oh, thank God that's over. That was fucking terrible. Holy shit. I need more coffee or something. Is this why macro guys do so much cocaine, Gaff? Because they have to listen to shit like that all day? JPEG got paid? Yeah, he did. I'm definitely not confirming or denying anything on that question. Now we rip into close? I don't know. I think the market gave up. They sucked the willpower out of us like energy vampires. Oh my god. Central banks are where the energy vampires live. Colin Robinson, another Canadian. It's fine. I clipped the most important part and sent it to you. Oh no.
One other thing I'll point out, though, about our relationship is we did do, as Randy pointed out, our first monetary policy, first review of our monetary policy framework really ever. And we looked around. Bank of Canada also does
Yeah,
annually. I
yeah,
think it's
that's
every 4 years.
that was the statement of the day. Wait, Turd, is CNS getting an exception to the move to T+1? Oh, so the capital requirements are moved forward a day, but CNS batch processing still retains T+2? What does that mean? Don't... Like, the first time considering 2.0 inflation might need to be adjusted? No. They mean literally the first time they've ever done a comprehensive overview of the effects of monetary policy. Why green? Why not? I'm gonna break apart the neutral positioning. So 75 resistance. Don't get too excited. Gamma's flat to the upside above 75 there. Are we gonna pretend like vol went up because of JPOW? Really? Yeah, okay. Well, I guess if we get above 80, that's kind of cool. Hunting stops? I need them to hunt them just a little bit harder so I can close my strangle calls. Strangle's lame. It's... Flat from 75 to 50.95. What happens if GoEV breaks $3? $3.01. About 100 KRE puts earlier today, and I think that may have been premature. It was also just bad. Why would you buy those? This is why I hate you. Why? This is gonna make sense. We're not gonna break 80, are we? I'm gonna move my stops up. They spoke to me? What did they say? Buy me, you wuss. The dollar cooled off a little bit. I don't think they said anything, though. Like, what's the market pricing in? Literally nothing happened. %100% year-over-year growth of 7 companies. We're just pricing in NQ's bounce on the weekly trend. JPOW said higher for longer. I bet you can't even name 1,000 bad KRE puts. He didn't mention BNED. Return to mean? I mean, back at 55? Sure, why not? Neutral's like $100 above us. The MM's kind of like 62, 63. They sold so many fucking puts. Yeah, now they're all gonna get squeezed out though. So that was, what was the point of that? Generational put buying opportunity. I got stopped out of my strangle at a 5% loss. I did make money on the put side though, so that was cool. But 5% less. Sorry, I'm trying to wake myself up after that shit. Holy fuck, that was depressing. I bet you can't name 10 more Canadian comedians. Wouldn't really care or want to. What was that show that was from Canada? It was like a lumberjack kind of guy, and he's got like a nerdy assistant, but it's like home improvement. Red Green, yeah. There you go. There's a Canadian comedian. I bet you can't look right at the camera and say, I love Pterodactyl. Probably not. Isn't watching the stock market a red green show? Yeah, actually. Rick Moranis. Trailer Park Boys? There's 10 right there. Did you ever watch Franklin the Turtle? Why did you sell your QQQ pet? I didn't want it anymore. What if I told you I'm related to one of the Trailer Park Boys? Would that answer questions? Probably not in the way that you hope. I miss John Candy. He was only 42. John Candy was the GOAT. Ryan Cohen is the real best Canadian comedian. Look at the hilarious way he's pretending to be a competent CEO. Yeah, but he grew up in Florida. I mean, like, I think he was just born in Canada. AJ's Corey and Trevor's love child. Are we gonna finally see 50-25? How would you feel about 50-50? Are you seeing this shit? I mean, I'm here, yeah. It makes sense. He got his comedy chops from Canada and his business acumen from 80-year-old retirees who relied on generational wealth to retire. Don't you dare talk about Kenneth Griffin's grandmother that way. 50-50 Iron Condor. What? Thanks, Lawrence. I think down, maybe big down. Maybe. I don't know if we have enough time. Well, that was fucking stupid. Oh, all right. Is that it? Are all the straddles broken up now and the short strangles closed? Maybe the market can finally move. Oh, and things are looking more bearish. Ooh, we got a nice little ramp to 50-25 now. Hmm. Is there enough positioning to break 50-40? Maybe not. Hmm. Like 2 more uppy downies today. We'll see. I don't think short vol's gonna come back as strong. It's a little put side capitulation here, but things still look pretty bearish. Momentum's kind of turning down a bit. Ooh, that's cheap. Hmm. Hmm. Can short vol sellers disagree that the market is more fun with VIX around 18? That, yeah, I mean, I would prefer that. 16's good. 18 gets weird. Hmm. Yeah, put buying's ramping up quite a lot. Oh, we got a gap down. Start squeezing out short vol. Oof. Mm. Just 50. SPX frozen. WeBull data, not gap. No, I don't think so. You sure those are bot puts? Doesn't matter, right? And yeah, there's been a lot of put buying. More importantly, almost all the out of the money calls have closed now. No, I don't use those. They make me sick. The Zens. This is wild, is it? What's Apple doing today? They're still pumping it to pay themselves. No, Apple fell off a cliff today. Could it be bought back puts? Still bearish. Right. Whether they're bought to open or bought to close, bearish. I don't think they're bought to close though, because we're not seeing a lot of realized effect in vol. No, they haven't. I'm still there. The fuck was that? Dude, why are these ranges so crazy? Just like stop loss hunting? Hmm. Such weird shit. I mean, Head and Shoulders are pretty bearish on the shorter time frame, right? It's not a Head and Shoulders, it's a Peen and Balls. Any thoughts on the video? Showing weird ranges as well. No, I haven't really looked at it much today. Yeah, I mean, they're all really choppy. QQQ's had some insane movement today. I don't think this is bullish though. I just had like a big ES buy at 50.87. If we get major downs, can we please get a bear song? I'll think about it. There's a ton of vol selling here, though. Just look for vol to start turning around if it does. No one said anything scary. Turn back. This looks like a head and shoulders now, and more like a nacho sombrero. Valid. We left that like weird downside gap too. Just right there. I don't know what the fuck that bounce was. That was strange. Maybe buying on tomorrow's expiry or something. More delta driven. Hmm. I'm gonna check tomorrow's expiration real quick. Give me a second. I mean, it still looks bearish. There's an unusual amount of resistance to that. Trying to keep the short puts from squeezing out, I assume, at 55 and 50, because there's a shitload of them. I think people are neutral for EU CPI tomorrow. Maybe a little bit. No, Charm's negative. Hmm. Is this about to go down hard? I mean, someone's trying to stabilize it. They're working very, very hard to stabilize it. Should have gone down back here. Hmm. Same story, 55, 50 on those short puts. Maybe they sold short puts at 60 on the rip. And those are fucking underwater. 60 didn't have a ton of interest. Oh yeah, it's got some. Hmm. All right. That's resistance at 70. Out of the money calls. Yeah, not many. Holy fuck, there's a shitload of puts at 50.35 for tomorrow. Hmm. The ever-loving fuck is driving this. I'm not sure what's pushing it up. There's really not any call buying. And there's not even that much put selling. We're high enough now that the puts can capitulate again. Or at least the ones that were sold earlier. Might just be trying to save them from getting squeezed out. Yeah, upside cap anywhere. Ball's starting to turn around. Give me 1 second. I'm gonna get some water. I'm not sure this is gonna fail. They keep fighting back really hard against the breakdowns. If it does, it could be epic, but it might not. Hmm. We got a ramp from here to the downside to like 50. And then whatever momentum picked up on that. There's still a big put wall at 75. So there is some stronger defense to the upside. This is wild. This push is nuts. Yes, is it resistance? Maybe. There's a decent amount of volume on ES. I think if we break the put wall, we'd go to like 5,100. There's not a lot of resistance past that. So I think like if the I wouldn't sell a call above it. They're selling so many fucking puts. Jesus shit fuck. It's gonna be really bad if it fails. I'm here for it. Or if any of them start capitulating, right? Especially if they start capitulating really, really quickly. Highway to the danger zone. Danger zone. Okay, I would like 150 BPS futures candle. Please and thank you. Play Kenny Loggins, you coward. Uh-oh. How old do you have to sing before the stream gets demonetized? There's only one way to find out. What's up, trash? It would seem that there's a distinct lack of buyers right here. Risk manager, talk to your risk manager, and they said we could have a sleepover. Cool. I don't have enough puts. Can you please play the bear song? I'm not going long here after that 2 p.m. denied candle. I mean, they've sold enough puts to float the Titanic at this point, and if they all get squeezed out, this thing's gonna pop like that billionaire. Also, this looks like a spaceship. I'm tired of you not acknowledging it. Fine. I acknowledge it. JPL trying to slip the old spaceship formation right under our noses. Dude imploded into a cloud of chum. Superheated chum. So it was cooked. It's good. It makes it easier to digest. For the fish. Thank God. Raw chum is just gross. I haven't seen this chart pattern before. It's the urethra. If you have any questions, ask Dave. And demonetized. So you're predicting straight down to form the other side of the shaft. Well, first we need the cleftal horizon to form. It's a stubby, I'll tell you that much. Secret peener? Wow. God, they're still fighting back. Fucking lame. We need to get below 65 for this to really drop. It's like the world's strongest dip buy. Here we go. If this fails, this could be it. The shaft. BNet halted? For what? It dropped like 70% earlier today with no halts. It's not? Oh. Nalted? Exactly. I'm sorry, was that the Cleftal Horizon? Yes. The Cleftal Horizon is now formed. Time to bear down? No. You need VIX back to 19 end of day. Ooh. But things are getting more bearish. Bulls are very, very, very slowly giving up. Almost imperceptibly. Can you explain the war in the Middle East from the perspective of a Buddhist monk with borderline personality disorder? Are you telling me to light myself on fire? I don't want that kind of attention. Why not 510? And I'll be the newest and quietest of the pigeon whales. 510 would be really cool, although highly unlikely. Are there any data-driven events for the rest of the week that matter? No. Not really. We have an auction tomorrow, I think. $20-year. Oh, we get the beige book tomorrow? No one probably gives a shit about that. Thursday's got some stuff. Existing home sales, jobless claims, Philly Fed, 5-year tips. Put buying is increasing ever so slightly. Wouldn't Violet book or Magenta book? I don't know. What happened at 13:30? We were about to drill hard. The reversal was nuts. Yeah, it was. Oh, we're so close. $63. So just right here. We just need to break right there. Basically. Do it. Hmm. Perforate that line. This one? $12 more minutes. Their 2 months is insane. I hate it here, but I can't leave without being executed by Dan. So what happened to BNED, and why is it down bigly? They announced their plans to stabilize the balance sheet, part of which includes selling 900 million shares. Are they going to stack 4 textbooks on the other side of the scale and call it good? Yeah, pretty much. People are buying puts, they're just not buying enough of them. 900 million seems like way too many. I don't know. They got a ABL facility locked in at like 3.5%, which isn't bad. They cover 34 million of their near-term debt. I think they walk away with 95 million in cash plus the credit facility. How's OPEX looking? Our charm flow is going to pick up in one direction. If we stay above 5,000, they're probably going to remain positive. Slightly positive. They're not super. I should be clear that they're not very positive. Eight more minutes. Supposedly they need the funding to meet the requirements for the government contracts they have. But if they do and they can roll out that program, they should be able to increase their revenues substantially. Or what calls 0 DTEs? There's not a lot of call buying going on here. There's a shitload of put selling. $50.42. Found support at $51.04. RSP is down on the day now. Down and NQ are still up. Russell's down. Vol's just getting shorted into the dirt. It's still in backwardation. Dollar's moving back up towards 106.30. Yields are starting to push up again. Forward yield on vol is still very positive. What's up, Popcorn? What is Tennessee? It's a state. Yeah, but why? I don't know. They didn't want to keep all the people in Kentucky in the same place. HE is just going to have years of legal problems, so it's probably not worth it. Hmm. Found support at 38. Hmm. Give me my money back, but sellers. Hmm. Fix back under 18 slightly. How hard is gold recovering right now? 24.11. Still less neutral positioning built for tomorrow, and so a higher chance for a larger move overnight. Right, ECB rate decisions in the morning, so I'm sure there's going to be some neutral positioning to contend with. Tomorrow's chain, I mean, still looks really fucking bearish. There's a pretty good put ramp from spot all the way down to like 50-20. Why do you look so clean? I don't know. Bath? Oh hey, it's 30. Gherk time's up. Well, red candle, right? You got any of that bathwater hanging around? No reason. I told you a million times. You gotta just stand under me in the shower. You look like you need a vacation. No, Powell just almost bored me to death earlier. Now that all the options are dead, we can finally drop. That's what brings them back to life. Dead options legs, dork, are the foundation of our banking system, okay? Wait till the water warms up, then, trash. What level of zillionaire do we need for shared shower access? Paul say anything interesting? I was getting a sandwich. Lucky you. I hope your sandwich artist took their time. Wait, aren't you still on the other side of the Mississippi? Maybe not. How many puts did JPM sell to finance my mortgage? I don't know, but when you get foreclosed on, your notification's gonna come from Nomura. That much downside exposure. I'd love to see the put sellers get wrecked here. That'd be cool. They deserve it. That shit was greedy. Also, I want VIX 20. Wednesday's for the Bears, right? $100 bips, 15 minutes. Let's fucking go. Don't worry, guys. Rising yields will do the Fed's job for them, or something like that. Bips. Thanks, Trash Panda. Oh wait, I have puts. Fuck. They're still worthless, but I mean, they're mine. Yeah, squeeze out all the short puts. Fuck this stupid shit. Oh wait, I messed up. There we go. Being on the big side of the Mississippi seemed like being on the shit side of America. Possibly. Russell, my Jimmies, welcome to Zillionaire, man. Thank you so much. Hit me up on the Discord if you need me to get you added to the country club, dude. Like, can they be normal for once? The Bulls are the one awkward person at the party. If we close right at 55, I'll be at max profit, which would be nice for the day. Hedge everything off as long as we don't rip over 75. Okay, not bad. Stay under 60. Bastards. Man, this market blows. Do something, Pickle Man. I mean, I called that to the minute. Just wasn't that much. I'd like it to be more. Fucking ES support at 50.93. What even is that? $10 at 4.676. Gold's at 2407. And the dollar's at 106.35. What the fuck? It should be sub 5,000 right now. This is bullshit. They released their plans to fix their balance sheet, Byronic. I'm break even on my BTU. Should I use this opportunity to escape and look for 18? It's up to you. Couldn't you just sell in the money cover calls at 18? And then if it, like, however close it gets, you could close them? They're gonna rip past 20 now that it's sold off. It's been recovering pretty well, right? It'd be nice if Israel did something spicy before the end of the day. Israel Defense Forces. Oh, here we go. 3 o'clock. Decided they will have decided how they will strike back at Iran, but not when they will, according to JPost. IDF has decided it will counterstrike Iran and its proxies, but has not yet settled on the timing. Because the timing is still variable and because all the necessary complex preparations, the current decision could change. However, the very development of a decision shows the severity and determination of Israel's leadership to strike back, though all indications are that Jerusalem still seeks to tamp down the attack to avoid spiraling into a regional war. This eye for an eye shit is going to leave everybody blind. Bullish. Donka Pickleman made some pretty change on that drop. Your handholding is invaluable. Muchas gracias. Nice, dude. Full port bullets. What do you think, Iranians are coming here? Why? Fucking Meal Team 6 versus a Predator drone. Joke. Because the border is wide open. It's like a fence. The world is baffling. It's like some bullshit high school cafeteria drama. I'm gonna get you, bro. Just wait until the gym teacher isn't looking. Yeah. We collectively built this, so it's our fault. Evangelicals want Armageddon. We're almost there. It's like when Hermione cast the blood-chilling curse on Malfoy and left him to die. Luckily, Quirrell found him. Yes. It's a cult that needs to escalate to keep people in. Glorp, win downs. Well, we got some. I'd like a lot more. Bull's just mad because we had 3 red days after 69 green days. Yep. No, I think short vol is just really fucked if they get squeezed out here, and they're trying very, very hard not to get squeezed out. Much appreciated. No problem, dude. Congrats. Thanks, NW. Dollar rising. Yep. I wish people researched their religions if it was that important to them. You know, sometimes you're tripping on bad wheat and you fucking... Jesus comes back and he's like, listen, Jews, I told you guys the first time. And then the Jews are like, oh, yeah, that makes sense. Time to pack our shit. I mean, it's... Where do I buy this edition of the Bible? Dork's working on a copy. He just keeps running out of LSD. The Gherkin Press. That's a great name for a financial newsletter. I'm thinking Thursday X-ray straddle for overnight. Please critique. I think vol's a little high to be buying straddles. Alright, so if today is all about crushing realized vol, that makes me super bullish on the back half of the week. Is T a possible on the SPY right now? Wait, what? Is what a serious statement. Remember the words of the misguided fool. Do unto others as you'd have them do. Not an eye for an eye is the golden rule. Just leaves a room full of blind men. Thank you, Taking Off Friday. Well put. Oh, doing TA on the SPY? Sure. I don't know why you would, but yeah, you could. Bullish the rest of the week? I mean, if they get realized vol down enough, it's going to make it easier for them to short volatility, which could prompt a turnaround, something I'd imagine they'd very much want before all of those puts expire in the money on Friday. There'd be one dude left with one eye, though. Not if they got each other at the same time, crossing screwdrivers or whatever. It's the best eye gouging tool. Don't say thumb. Probably a spoon. Yeah. Melon baller. Chopsticks. This fucking sucks. What a shit end of day. All that potential squandered. And on what? Absolutely nothing. Huh. Tiff Tuesday. I told you he bored the market to death. Do you ever take a nap after market close? No. Gross. Naps are for babies. What's the range of the upside look like at the end of the week? Not good. I don't know. 51. 5100, 5115, and then just fail again. I don't even know if we could run up that high. There's so far to go. There's fucking massive put walls everywhere. There's no good reason for us not to hit that ramp to 25 today. Especially with dollar and the yields where they're at. I wonder how hard realized vol got crushed. Fixed strike dropped almost 1%. Implied vol is still really high. Yep, that's it. 62. Well, I guess we held the 56 resistance into close, which isn't great for a continuation. Although, I suppose that could change here. It's not probably going to change a lot. 56 was support on the daily, I think. Yeah. We didn't fill that big fat downside gap either to 49.82. The put's dead, and it's your fault. Why mine? Why didn't you destroy KRE? Why is that my choice? This is all your fault, Kirk? I'm not the one buying billions of dollars worth of... They're selling billions of dollars worth of puts into close. I'm just sitting here. Is GoEV dead? I don't know. It's not off reg show. I kind of don't think so. And I bought the 50-25 put for a correction, which then never happened over the course of an hour. It's not like they were worth selling back at any point. Like, we reversed the moment I bought them. They were already worthless by the time we hit here. All of this through Yahoo Finance can say stocks close up. I'm not even sure they're gonna close up. But if we close below 56, as far as a continuation is concerned, that's pretty bad. Even God rested on the 7th day. Take a nap. It's like some amazing drug. Just makes me groggy. Ooh. Oh, great. 4 minutes of sell off. Well, that's not going to be enough. Yeah, I'm gonna need 3 more 20 bip candles. The CTA, yeah, the big CTA triggers at 50-30. 50-50 is one too, but 50-30 is bigger. If we fall below 50-30, I think CTAs are selling like 20 billion on the flat tape. Or no, they're selling 20 billion no matter what the outcome. Flat up or down. It's a lot of futures. I mean, theoretically, we could still close below 50 today. They're commodities trading advisors. Some of them are like little MMs for the SPX. Some of them are big MMs for the SPX. Why do you sound like you're on Xanax? JPOW bored me. And I didn't have enough caffeine today. Bullish at the end of the week comment makes you nervous. Well, it's more bearish now that we're below 50-56. So less to be nervous about. Or at least slightly less to be nervous about. If we held 60, that would have been strong for the bulls, but now realized vol's gonna pick up into close. Haha! I can't believe someone bought this. Amazing. Oh wait, they didn't. Son of a bitch. Ding ding. The day is done. 50-51. That puts us a bit below the 50-56 level into close, which is technically a continuation of the correction, making the entirety of today basically one big bear flag. There's still a big fat gap below 50-38, and this is a big CTA sell-off area too. It's also where the JPM puts are right at the bottom of that. Delta neutral's kind of going to be in the middle of that range. If we start breaking lower, this is quite bearish. But yeah, probably have a little less upside to worry about into the end of the week now that we closed below 56. That's gonna pick up realized vol at least a little bit. No breakdown here, but we could get the rest of the breakdown in the overnight session, or maybe with the Eurozone decision tomorrow morning. Commodities up a tiny bit today, despite many commodity stocks taking a big hit. Correlation turned around a little bit, both on the 1 and 3 months. They really tried to short the fuck out of vol today and push the dispersion trade. I think NQ... Oh, NQ closed just barely red. Forward yield on volatility, 5.35%. And the carry trade still getting pushed up, almost at the highs from October. We're pretty close. We're only about 39 points off. Bond volatility is still skyrocketing. Tail risk hedges are picking up. Most of the S&P, the vast majority of the S&P under its 20-day moving average. And correlation between VIX and VIX futures a little bit more in line today, but VIX still very much in backwardation, gaining back about 2% of its 6% drop today. We're pricing in just under 35 points of rate cuts. RSP underperformed, especially into the back half of the day. What does this put us for tomorrow? I mean, this puts us very much in the same place for tomorrow as we were today. Or at least going into today's market open. I will say, though, that we're getting close to a point where any further downside is going to be fairly dramatic, right? If we lose 50 and start breaking into that 30 range, we're going to get CTA sell-offs. The CTA sell-offs are going to drive us into that synthetic long, which is also right around where delta neutral is. If we fail delta neutral, we're probably going to fall below the JPM puts. This is like the 4th consecutive day they've been unable to get volatility back in line, and their margin is not getting any better, right? 10-year closing out the day at 4.659. Flattened out a little bit from its high, but still moving up, right? Like the trend over time here is very positive. Yeah. SLD starts tomorrow. And margin requirements haven't eased any, so I feel like my port's about to see a bit of an upward correction. Maybe. Can you explain what's the dispersion? Short vol indexes, long vol equities? Or, well, the underlying components of said index. It's more accurate. Till Tuesday morning when we go back to 50-50. I mean, if all of these short puts expire in the money on Friday morning, that's going to be really bad. That's a big loss to eat. Like right now, I mean, they've got to manage the margin requirements, but then managing the loss is also going to be rough. So gold bounced back. I mean, I think it looks good. It's recovering. Found support at the 2340 level, and it's already back above 2400. I don't think currency risks are going anywhere. I mean, it's pretty obvious with the dollar at 106. Europe's decision tomorrow could see the euro fall, which is going to drive the dollar even higher. So actually, the European rate decision tomorrow, if they cut rates, it would be extremely impactful. But even if they announce that they're going to cut rates in June, the impact could be pretty severe. Were the short puts expiring on Friday? I mean, 700,000 contracts at 5,000. A lot of those. When's the Euro rate decision again? Tomorrow morning. Right? No, not tomorrow morning. Wait, is it tomorrow morning? Hold on. I think it's tomorrow morning. Oh no, Euro inflation is tomorrow morning. Sorry. Which is gonna, yeah. Euro inflation tomorrow morning. European Council meeting. And then... Sorry, yeah, the inflation, not the ECB meeting. But their inflation, if their inflation is down, it's going to increase the likelihood that they cut at the next meeting. Oh, also Great Britain inflation in the morning too, and Japanese balance of trade tonight. If imports are, and we're not really getting pricing with that, but yeah, well, that might not be that important. Yeah, no problem. Thank you guys for tuning in. 1 second, guy. Thank you so much for hooking everybody up with Cornish on. Guys, welcome aboard. Yeah, no problem. I'll catch you guys later. Peace.